morning, it's 8 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. Top stories say Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al Taher says Joby Aviation will exclusively operate the service for 6 years with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year. The RDA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. Moving on, the UAE Ministry of Finance has strengthened international partnerships and discussed the future of fiscal policies at the World Government Summit in Dubai, which runs from February 3rd to 5th. Minister of State for Financial Affairs Mohammed bin Hadi Al Husseini said the UAE is committed to shaping global dialogue on economic policy, making and building more resilient, sustainable economies in the face of economic, technological, and geopolitical challenges, according to the Emirates News Agency. Sessions at the summit focused on fiscal sustainability, digital transformation, and the responsible use of artificial intelligence in public financial management to enhance transparency, efficiency, and stability. The ministry also co-hosted a GCC session on economic transformation and fiscal and monetary integration and signed a memorandum of understanding with Kuwait and Bermuda to expand cooperation financially on fiscal policy, budgeting, taxation, and public financial management. More News says that India and the United States have signed a major trade agreement, officials say aimed at reducing global economic uncertainty and strengthening bilateral trade. India's Economic Affairs Secretary described the deal as a stabilizing measure for international markets and a boost for investment flows between the two countries. The agreement includes tariff reductions on key sectors as gems, auto parts, and chemicals, providing opportunities for Indian exporters. Analysts say the deal reinforces India's role in global trade and reflects a broader strategy to expand its international economic partnerships. Officials highlight the deal as a milestone in India-US relations with potential long-term benefits for both nations' industries and for global economic stability. This is the news for now. We'll be back with the headlines at 8:30. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
This is the Morning Drive with me, Tim Elliott, here on Mira Business FM, and it's really all about your finance. Now, capital doesn't wait for certainty. It moves from tighter global regulations to shifting tax frameworks, new pressure on cryptocurrency, new pressure on property, cross-border wealth. The question that lots of investors are asking right now isn't really what worked last year, it's where should my money be today? Is there a difference? We're going to try and find out. Where's the smart money moving now? Which assets are gaining traction, and how are investors adapting in the current environment? Remco Koeman is the founder and CEO of the international advisory and investment firm Epic Edges Group, and he's with me in the studio. It's good to meet you, Remco.
Likewise, good to meet you. Thank you for having me.
Good to have you here. I wanted to start this morning, and this will be kind of a round-robin conversation in lots of ways. There's so many things to kind of unpack, really. Couple of general observation type questions, if you don't mind. And first of all, I was reading you in Khalij Times at the end of the year, and I'll put the quote to you now. You said last year, 2025, rewarded the most useful assets, not the most fashionable ones. And also it was the year that investors stopped asking what can grow fastest and started asking what still works when things break, which I thought was a good quote. Reading that now, as early as we are, we're still in January 2026, this year is more of the same, isn't it?
It is. It's more of the same, and it's actually accelerating if you look at it.
Yeah.
There are so many things changing in the world, and so is the investment world is changing as well. So to really think about what's going on, anticipate on the next steps.
Okay, so it's fair to say lots going on in the world. We are in uncertain times. We hear that kind of, I'm doing the air quotes thing again here, oft repeated. Do you feel like where we are at this point, it's a more critical moment for investors when it comes to decision making, rather than, playing the long game and waiting things out?
Yeah, you should stay ahead of what's coming. And like I said, it's an unstable situation, so you have to look at your portfolio and rethink about next steps. So if you look at what you just said, it used to be quite straightforward to invest in projects that you can have a high return. For example, in IT, high risk, high return. But nowadays, things are changing. So you have to focus, that's my advice at least, focus on more recession-proof projects, which is totally different.
Okay, the other thing I wanted to ask you, just before we get into my kind of more structured questioning, is I'm interested in your thoughts with investors and investment in mind as President Trump enters the Davos spotlight today, where we know he's on the way, may have already landed. I think he's still in the air, particularly given the geopolitical backdrop, the situation over his recent actions. And of course, I'm thinking intentions towards Greenland, because that's going to be scrutinized this morning, let's put it politely. How welcome he will be, and even he's laughing about that at Davos today, is the other question. How are you reading this whole situation? What are your thoughts?
My thoughts are mainly focused on, because I'm European, if you look at how the European countries and the EU is responding to this, they have no clue what to do. And they were actually just following him as a leader, because what he did but it's 1 year that he is in the office now, I think.
It is.
He did something totally different. And that's not the way you're supposed to do business. That's what they think. So they look at him, what's this guy doing? But he's actually serious. It's not joking. In the beginning, he said, let's see, it will turn out, it will go back to normal, but he's still not going back to normal. As far as we consider normal. Things are crazy. So they have no clue what to do.
And it's so difficult for somebody like you, because what markets like things to be, there's a certain predictability that is comfortable, and there is nothing, whatever you think of President Trump, and I'm not making an assessment of his character or his actions, the one thing I do know about him is that I don't know much about him and what he's going to do.
I know. And it's unpredictable, but it's like he's doing things that nobody has ever done before. And you can say, you can like it, you either like him or you hate him, but at least there's something going on. Yeah. It's not boring, huh?
That's certainly the truth. Your group operates across 5 jurisdictions, I read. From what you're seeing with your clients at the moment and the advice that you're hopefully giving your clients, where is the smart money actively moving at the moment?
The smart money is actually moving away from the investments areas who are influenced by let's say, the things that are going on in the world. So emotions. And one of the things that's very emotion-driven is like crypto. So people used to be very good at crypto. You can make a lot of money in a short time if you know what you're doing. But it's so emotionally influenced. If Trump pulls out something, then it goes down or the other way around. So it's not stable anymore. So the quick money is gone. And if you look at where the fast money, the clever money is going, you have to look at more looking at protecting your money instead of making a lot of money in a short time. So that's what I said before. You have to look at the options for recession-proof projects. Those are agriculture, for example, or healthcare. There are more like sectors that you can actually invest in. That's where the smart money is going now.
Okay. What about here in the UAE? I wanted to ask you, again, fairly broad question, but beyond the real estate headlines, because that really is obviously the real attention grabber. What is it about the UAE that makes it such a strong an increasingly strong investment base?
It's all the commercial real estate, for example. I'm not a big fan of real estate because I think there's a bit of an oversupply, but it's a different story if you look at the housing market. But for commercial real estate, there's a huge demand. So it's always very stable investing in that area. But from a business perspective, what we do, we set up the companies, we set up this trust, the foundations, and we do business from the UAE. So the UAE is actually the home base. And you can build your wealth, you can protect your money, you can build your life while you do business all over the world. So it's mostly the hub function. And the UAE should actually, especially Dubai, Abu Dhabi, should focus more on the fact that they're very strategically, the location is strategically. If we do business in Africa and Asia, from here you have 4 or 5 hour flights and you can go everywhere. Yeah. So the location is actually key in the moment.
Okay. Let's get back to crypto just briefly. You mentioned it there, the emotions at play. There's another question I want to ask you about emotion. How you divorce that? How you take yourself kind of outside of yourself as well? We'll come to that. Mm-hmm. How has the way serious investors approach cryptocurrencies, how is it changing? Because we have a nascent industry, really 10 years or so. Yeah. Kind of a new thing, but also completely not a new thing, which is a weird juxtaposition, I think. How is it changing at this point in time?
It's maturing. It's like I said, 10, 15 years ago it just started, and now it's like, it's not that mature as it is in the stock market, for example, but things are getting better, it's getting more stable. But still, there's a huge emotional influence. Depending on what's happening in the world, like I said, depending on what Trump calls, or he says something in the news, and then it goes down or it goes up. It's so not stable yet. But on the other hand, if you look at my clients, all of them, they are investing in crypto, but let's say 10 or 20% of their portfolio.
Okay.
So yeah, I wouldn't recommend to put everything in it, but if you diversify your portfolio, that's the key. And crypto is, of course, and there's not only Bitcoin, but also a lot of the altcoins. If you know what you're doing, you have to really look into what's going on and see and predict what the next step will be, and you can still make a lot of money. So, but it's still not a mature market.
Is that what you say to clients? Because it used to have 10% in gold in your portfolio, didn't it? Yeah. That was kind of the general advice. I guess at the moment it might be slightly higher. But is crypto the new gold in terms of the way you allocate assets?
Eventually. Yeah, if you percentage-wise, I would say that's true, because it's a new backbone of the whole system. Yeah. The whole financial system is about to collapse. On the other hand, we've been talking about that for years now. It was supposed to collapse already, but it's still not.
It's been collapsing for hundreds of years.
It's a slide scale. It's
but
going down.
There is a change coming.
Definitely. There is a change coming. So we're looking for a new backbone, like a national reserve. Trump had the idea of putting Bitcoin as a national reserve, or Ripple. That hasn't happened yet. But you see, there's more stability in the market now. It's getting more mature. So eventually, I think it's the next big thing if you look from a backbone perspective.
Okay. In terms of digital assets in particular, I mean, frameworks are they're emerging to provide legal certainty. You've got countries exploring central bank digital currencies, regulating stablecoins. In the EU, the Digital Operational Resilience Act mandates third-party oversight. So digital assets are no longer kind of left of center. It feels to me as though we're at a point where it's mainstream. Digital currency is now. We're all kind of accepting of that. Am I reading this correctly?
Well, you don't have a choice, right? It's implemented. Central banks are implementing it. The CBDC, but also there's more than that, the controlling. If you look at DAC 8, which is controlling of the cryptocurrencies, CARF, crypto exit regulation worldwide, everything is controlled. Wherever you have your portfolio, wherever you have your wallet, worldwide, the information will go to the country where you're a tax resident. So they will know that you have your wallet on the other side of the world.
Sure.
And that's all digital. Yeah. So if we have if we like it or not, we have to.
It's a different time. It's interesting you say, I mean, everything is controlled because global regulations are tightening in so many areas, so many localized agendas, for example, driven by tech, AI. We've got new risks, not just cyber risks, but climate risks as well. There are cross-border tax changes. Here in the UAE, we've got the new framework for digital finance, the UAE's new CBUAE law. So that supports kind of the digital dirham, doesn't it? How are these kinds of developments, and there's a whole list more, already influencing where people put their money?
Yeah.
Do you think? How is that starting to impact?
It will have a huge impact. So you have to...
In which direction, I mean? In terms of
like I said, it will be controlled. The government will actually... They know where your money is, and they know where it is, and how much it is, and what you do with your money. But for my opinion, there's a huge difference between your private wealth and your company's wealth. And that's what I advise my clients. you make sure that you don't have any private wealth anymore, just put it in the company. And in many countries, you can put it in a trust, you can put it in a foundation, in a company, then it's not your money anymore, but your company's money, which is different. And from a European perspective, that's really important because then it's not taxed. It's only taxed as soon as you take it out. And private wealth is getting taxed more and more. Everything is under control. And that's a different story if you put it in your company. So you can, the good thing is, for that kind of job that we are in, my line of expertise, we're always looking for options. And if there are new regulations coming, there are also new options. That's a good thing.
Yeah, for sure.
Yeah.
And I mean, you have to make a distinction there as well, because, you know, what you're saying is not tax evasion, you're talking about tax avoidance.
Absolutely.
And you have to make that distinction.
That's a big difference.
In that case there. Let me ask you another really broad question. I feel like I'm asking you these huge, broad questions this morning, but they're all things that are in my mind. Because, you know, again, it's an uncertain market, let's put it. People are kind of jittery. Not even jittery, just, I think there's this, what's next? What's coming? What's President Trump going to say? Because, you know, he is moving markets. What's the biggest mistake investors are making at the moment, do you think, when you look at what's going on?
Let them emotions take the overhand.
Still,
Yeah, and it's kind of greed, and that was beginning in like, it's going to the casino, it's the same what happens with crypto. I can make €1,000 a day, but let's try to make it 10,000. At a certain point you have to put, this is it, this is my goal for the day. If you make your profit, then you get out.
Okay.
But greed is, that's an emotion, right? So that's not a good thing. You should not listen to that. Just make a plan, stick to the plan, that's the way you should act.
That's, I mean, in a perfect world, that would be a great way to exist, wouldn't it?
Yeah.
How do you rein people in? Because you must have clients, I'm guessing, and no names, I'm not looking for that. But how do you rein people in? Because you must need to do that. 'Cause it's a very difficult thing to do. Human nature. The one thing that we've talked about today, I think, when it comes to human nature, is you can't predict it.
No, but you have to learn it the hard way.
Yeah, okay.
So everyone makes a mistake and says, I shouldn't have done that, but you did. Okay, well, shit happened, let's go on. That's what happens.
Yeah.
And you have to keep, take your losses and then go for the next step. But from now, it's like the most important thing is diversify your portfolio. So that if something goes wrong, it's not a big deal. You lose like 10 or 20%, next day you compensate for your losses. So you should look at it from that perspective.
It always comes down to that, doesn't it?
That is,
diversify
it is,
portfolio. Yeah, spread your risk.
And overall, if you look at the average, you still make your profits. That's fine.
And that's the best approach in uncertain times, like where we are now.
Yeah.
Okay.
Yeah.
Investors today, more focused on growth or protection? How do you balance the two? You've expounded the virtues of being slightly more protective, I think, at the moment.
Yeah.
How do you talk to your clients about, you know, I don't know, not exceeding their own expectations?
Yeah, it depends a little bit on how much money they have available, and if it's the money that they really need or it's money that they can miss. That's a big difference. You can obviously invest in projects with a higher risk if you don't have an issue with losing 1 million, that's fine. But if for you it's a big deal, then you should, of course, think about what you're investing in. But my advice is always, like I said, diversify, that's the key now, but also look at the recession-proof projects. But you know there's a recession coming. We actually are in a recession, even if we're not aware of it, but we are. Things are going down now from now. It's not getting any better. But in these uncertain times, the biggest companies have been started in low economic situations. So there are so many options. So if you look at agriculture, look at healthcare, look at food, things like that, the manufacturing of food companies. We invested in a cocoa plantation, for example. Those are the best things to go. And if you look at a geopolitical situation, don't let them influence it. Just make sure that you have your portfolio wide and it's broadened. And from a continent perspective, Africa is the next big thing. I keep saying that. There's so much things going on in Africa. It's quite impressive what's happening over there.
Okay. In particular, what are you looking at in Africa?
It used to be the situation that they needed Europe. The European countries in the colonial times, they were needed in order to make something happen in Africa. But now it's the other way. They don't need Europe countries anymore. Not at all. They don't need France, they don't need Germany, they don't need Netherlands, they can do it themselves. And I've been going to Africa like 10 or 15 years. And if you see now what's happening, it's amazing. Every time that I'm back there, there's something new. The developments are so immense. It's hard to believe. They overtook actually Europe on all sides.
Okay. What about precious metals. I mean, the records just keep coming. Gold and silver, once again this morning, record levels for, what was it? I saw this morning, was it 48.40, something like that, I think it was for gold this morning. Around about there at the moment. How much more have those kind of traditional safe haven assets, like precious metals, come to prominence, both in terms of allocation, but also in terms of, client demand? I mean, it's the last year or so, isn't it, that I guess people, is that the case?
Yeah, it is a little bit more than that. It started 1.5, 2 years ago.
Right.
That you look for some stable opportunities, and gold and silver like metals, but also lithium. We have like some metal mines, gold mines. That's immense.
Right.
Developments are huge because it looks like a stable market. It is actually a stable market, and the profits have been immense the last few years.
Yeah. Okay.
So, in an economic uncertain situation, people are always looking for some kind of a certain investment, which makes total sense.
Yeah. How much gold should investors hold in their portfolios?
For now, I would say 30-40%.
Would you really?
Absolutely, absolutely. For now, yeah, because I'm expecting even it's getting better, and as soon as everything goes totally down, because there will be a lot going on in the next few months, at least you have your gold and silver.
What about silver? How much?
Yeah, silver is the same. Yeah,
really?
Yeah, it's catching up.
Yeah,
I think it's a bit of undervalued. I think, in my opinion. Everybody was going to gold.
The perceived wisdom seems to be that we have a regular gold commentator, Jeff Rhodes, who comes. He'll be back in on Friday. His prediction for gold this year: $6,500, $6,500. That's his thinking, and he's just upped his silver. I say prediction, but I don't want to put him on the spot in that way. But he thinks it could reach $150, and
he's saying he's a gold guy. You said so.
He's a gold. And gold and silver.
Oh, silver. Okay.
So certainly he would agree with you.
Yeah.
Couple more questions for you, Remco, and I appreciate that we're kind of going all over the place here, but I don't know where you zero in at the moment because the unpredictability is so prevalent. Anybody listening, watching this at the moment, what smart move would you suggest at the moment, even if you're not ready to invest, but you're thinking, look, maybe you have a bonus or a lump sum or something, or you're looking to allocate, a percentage of savings to something. Would it be Africa? Would it be gold? Would it be silver? What's in your head?
It's very easy for everyone, even if you don't have a lot of money available for it, to start small. You can do it in silver and gold. You can do it on your bank app. Most banks here in the UAE, you can actually just invest in some silver or gold.
Yeah.
It's a great way to make money, and you get to use. Actually, you know how it works. So start small. Start with small steps.
Is it the habit? Do you think? Is this?
It should be a habit. So
for somebody that doesn't have that habit yet.
No, but the thing is,
learning that.
Yeah, but a lot of people, especially from my generation, they're used to saving money. Put it on your savings account. But that's something from the past. You should do the same.
It's like
that's the same.
It's like you're looking into my soul.
I know. That's the way it works. But you forget saving because the worth of the money is getting lesser by putting it on the bank. Yeah. Because the inflation rate is higher than the interest rate that you get. So it doesn't make any sense. You could actually replace the saving. So let's say you do 1,000 dirhams per month. Yep. Don't put it on the savings account. Put it in silver or in gold. You can do it on the same account on your bank. That's the way to start. Small steps. Okay. Before you know it, you get used to that.
What do you say to people that come to you? You work with lots of, I guess, high net worth, ultra high net worth, people like me. Yeah. You're working with lots of different clients. Yeah. What do you say to people that use that well-worn kind of phrase? Look, I really don't understand the jargon. I don't get the markets. It's not for me. That's not my area. How do you counter those kind of? Well, they're not arguments, but they're feelings as much as anything.
Yeah, but the thing is, it's a comfort zone. They're not used to it. Like I said, I was brought up by the situation of in a life that you have to save for your future, for your pension. That's something of the past. It's not happening anymore. Yeah. But if you have to do something different, at a certain point you have to do it. But you have to get out of this comfort zone. So it's a process. For example, I have very high net worth individuals who never had a company, but they get one way or the other they do have the money. So I advise them to put that in a company. So protect it. So get it out of your private wealth, get it to your company wealth. But then they said, I never started a company. Okay, but you have to do that. You have to take the step. And once you do it, then you look back, it wasn't that hard. So you have to do everything that frightens you, that scares you. And even for people, I'm 55, so even in my generation, you have to learn something that you didn't before. Yeah. Do something that scares you. That helps you. And It doesn't matter. I talk to my son like that, and my son is 8, so I have the same conversation with him. I'm scared to do that. And I never did it before. Okay, but do it. And once you're done, you see, hey, it's not that bad. And even in people in my age, do something that you didn't do before. Get out of the comfort zone.
That's a good piece of advice. I like that. It's interesting, though, isn't it? Because I mean, you and I'm guessing, come from a generation where, we were very used to this idea of job for life.
Yeah, absolutely.
And that has completely changed. And I think that in lots of ways that's upended the world in that it's perfectly okay to move now, to do something, to learn something new, to become a barista, start a coffee cart, whatever it is that's in your head that you want to do, and to jump from career to career. Therefore, financial planning is a completely different matter, surely.
Yeah, but it depends on what you do. Because like you said, nowadays, there are so many options. You can make business on the internet. You can start your own company in a day. You don't need to do much for it. You can start making videos. That's what I did a few years ago. Started making videos about my experience, about my knowledge. And that turned into a business. So the financial planning is not in front of that. It's actually running behind. So you have to just do the things and do your financial planning based on what you're doing instead of the other way around. Because we are brought up from you have to plan first before you do. But now it's the other way around. Do it first and then you start planning.
Is there an element in your, we're running out of time, I keep asking questions about you, but is there an element in your job of the psychotherapist in some ways? Do you feel like that sometimes?
Yeah, sometimes I do.
Yeah, I bet you do.
I have clients hiring me just to talk to them. Yeah. And then after an hour I say, what have you been talking about? I have no clue. But, you really helped me. Okay, well, it must be enlightening for you. I think it's funny. So in a certain way, it definitely is. Yeah.
I love it. You're such a Netherlands guy, so direct. I love that.
I know.
All right, final question for you. What separates investors who are going to do well in the next phase over this year, for example, from those who will struggle, starting from today?
The people who will survive in this world are the people who will diversify and not let emotions take the overhand. So you have to look at what's going. And again, I come back to my repeating phrase from invest in recession-proof projects. So make sure that you are prepared, and whatever is happening in the world, it doesn't influence your portfolio. Okay. If you don't do that, which means for a lot of people that they have to totally change their way of investing. But they have to be open for that. The world is changing, and so is the investing world.
And it's back to that mantra of earlier, isn't it? That, be ready to learn, to do something new, move out of your comfort
prepared.
zone.
Absolutely.
Yeah. And what you're not saying there is be ready to take more risk. You're saying
not necessarily.
Be ready to try something. Be ready to jump in.
Yeah. In a certain way, every investment is a risk, of course.
For sure.
Yeah. But it's better than.
Good morning, it's 8:30 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. The UAE Ministry of Finance has strengthened international partnerships and discussed the future of fiscal policies at the World Government Summit in Dubai, which runs from February 3rd to the 5th. Minister of State for Financial Affairs Mohammed bin Hadi Al Husseini said the UAE is committed to shaping global dialogue on economic policy making and building more resilient, sustainable economies in the face of economic, technological, and geopolitical challenges, according to the Emirates news agency WAM. Sessions at the summit focused on fiscal sustainability, digital transformation, and the reasonable use of the artificial intelligence in public financial management to enhance transparency, efficiency, and stability. The ministry also co-hosted a GCC session on economic transformation and fiscal and monetary integration and signed memorandum of understanding with Kuwait to strengthen bilateral relations and promote the financial cooperation with Bermuda to expand cooperation on fiscal policy, budgeting, taxation, and public financial management. Moving on, Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al-Tayar says Joby Aviation will exclusively operate the service for 6 years with trial flights already underway. He also confirmed that the driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, according to Gulf News. The RDA says that these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. The Sharjah Chamber of Commerce and Industry has met with the Vietnamese trade delegation to discuss expanding economic and investment cooperation between the two countries. The Emirates news agency WAM reported that the talks focused on strengthening private sector partnerships under the UAE-Vietnam Comprehensive Economic Partnership Agreement. Officials noted that the trade between the UAE and Vietnam reached around $7 billion in the first half of last year, with UAE non-oil exports recording strong growth. Discussions covered opportunities in logistics, manufacturing, pharmaceuticals, smart technology, food production, and supply chains. Both sides described the visit as a strategic step toward deepening business ties and increasing bilateral trade, with Vietnam highlighted as a key gateway to wider Asian markets. And now, a quick market and currency update. Bitcoin today is trading at $76,598. And for those tracking remittances, 1 dirham equals about 24.61 Indian rupees, 75.90 Pakistani rupees, 33.24 Bangladeshi taka, 16.05 Philippine peso, 12.79 Egyptian pound. Meanwhile, 1 British pound is equal to 5.03 dirhams today. That's the news for now. I'm back with the headlines at 9, and follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
The sound of success.
It's the morning drive here at Mira Business FM, and real estate now, real estate in Saudi Arabia. New data from Cavendish Maxwell. The numbers, I have to say, the numbers are staggering. 57,000 new units heading into Riyadh's pipeline. Quarterly sales in the capital alone hitting 17.6 billion riyals. But it's not just Riyadh. Dammam is seeing record-breaking demand, and a major regulatory shift in foreign ownership is about to change the game for 2026. So, with us to break down Q3 2025 performance, the figures there, and to look ahead at what these 100,000 plus upcoming units mean for the market, it's not just Riyadh, is Sean Heckford, Director of Built Asset Consulting at Cavendish Maxwell. Sean, it's good to have you on the programme.
Morning, Tim. Thanks for having me on. Much appreciated from a very cold Riyadh.
Well, it's funny, isn't it? At the moment, I was downstairs at 6:30 this morning thinking, oh, it's a little bit parky, should have put the cardigan on the way here. Sean, can we start with that 17.6 billion Riyal figure for Riyadh in Q3? I mean, even with rising prices, the market's demonstrating pretty considerable resilience. What's driving this kind of confidence in the capital's residential market?
Yeah, I mean, Tim, to be honest, Riyadh's performance this quarter has been remarkable. It's driven primarily by the Vision 2030 growth, government housing initiatives, and a very strong investor confidence in premium segments. But to break that down a little bit, and for those listeners, viewers that haven't read the report, approximately 13,000 residential sales transactions happened in Q3 of 25. This marked an increase of 18.7% from Q2. Now, that said, compare that to the same period last year, it's declined by 43%. That's primarily driven by the affordability pressures following on rapid price appreciation that we saw in 2024. Now, obviously, the government have done some things to address that, and we'll go on to that later, I'm sure. Despite these challenges, that quarter-on-quarter improvement just indicates that the demand continues to persist.
Well, it does, and 2024 was a remarkable year, and that's nowhere near where the kind of adjectives we could use. Your report highlights Dammam as a standout performer, 60% year-on-year growth. Why such a shift to the Eastern Province?
I wouldn't say it's a shift to the Eastern Province. I would say it's the Eastern Province becoming more prevalent.
Okay.
There's several reasons for that. The Eastern Province is the kingdom's major industrial and logistics hub. There's been an awful lot of investment in these areas, and obviously that's creating jobs, which in turn is driving demand for housing. There's also the ongoing development of the Causeway connection and other regional infrastructure that's all focused around that Eastern Province because of the industrial and logistics that's based there. So that's also having a huge impact, and obviously there's a long-term appeal to investing in that region, and obviously you need real estate or residential real estate to support that. But of course, one of the other primary in residential driving factors is cost. It's a much more affordable and accessible price point for buyers and renters in that region.
One of the most talked about points, Sean, in the report is the upcoming foreign ownership law. How much of a game changer is this going to be for the market this year and going forward? And are we already seeing investors, positioning themselves for it?
Yeah. Opening up prime locations to foreign ownership is bringing international interest. It's going to increase demand and price premiums, especially in the luxury segments. I mean, we've had it reported that the Trump Organization is working with a Saudi partner in this luxury sector. But to break that down again a little bit more, there's a wider pool of international investors now that are looking at Saudi as a result of these changes in the legislation. We anticipate a substantial increase in that foreign investment, direct investment, of course. There'll be greater liquidity, transparency, and competition within that, particularly within the luxury sector. And whilst the law's impact will unfold over the next few years, it's not, it's going to take some time to settle down, people to get their heads around what they can and can't do. But there's many international entities exploring the market and seeking to establish partnerships and identify opportunities ahead of the law's full implementation. The other thing, it's expected and we anticipate it's going to breathe a bit of additional life into some of the bigger projects or the mega projects, giga projects that are ongoing, such as Diriyah and Qiddiya, where they're close to population centres. Foreign investors could see this as a good opportunity for a quick ROI because they're up they're up and running, to be honest. But they're growing and that additional investment is going to have we think is going to have a huge impact on those developments. I mean, the other thing that we've discussed internally is, there's a large population of foreign residents, as we know. I'm one. And it gives a paradigm shift. It provides a pathway from traditional transient, everybody's got to rent, nobody can buy a house, to a little bit more stability. If you want to invest in Saudi Arabia and you want to set down some deeper roots because you see this is the future for yourself and your family, this makes it a lot more realistic, achievable. And gives people more confidence to invest and invest in the country, not just invest in real estate. But of course, the other thing that was announced this week, and I don't know if you've touched on it yet, is the announcement that foreigners can now trade Saudi stocks and shares from February. That's going to have a huge boost to confidence, not in the country, and obviously that's going to have a knock-on effect to residential real estate as well.
It's so interesting that because, both of these, the foreign ownership, foreigners being able to buy stocks and shares really ups the ante for the region. as well. And we've seen this rate of change here in Dubai since foreign ownership was initiated, very early 2000s. I remember the days that came in. That's going to happen in Saudi Arabia, but it's the rate at which the changes happen. It's very hard to keep up with, Sean.
Oh, it is indeed. Trying to keep abreast of these developments as they're happening is a challenge. Fortunately, at Cavendish Maxwell, we have a great research team that stay on top of all this. And obviously, with me being here in Riyadh, I'm on the ground, so I'm getting a feel from the Saudi nationals themselves, talking to people around the city and around the country as to what's happening. But everybody's in the same position. It's moving so fast. And I've got to be honest, I don't think any other country in the world has ever moved this quickly. I mean, Dubai's been a huge success, but that's taken, let's say, 20, 25 years to actually get to where it is now. These guys are aiming in single figures to achieve the same things. It's phenomenal.
No, it really is. It's very hard to keep it in perspective, I guess. Look, let's get back to Riyadh slightly. You projected over 105,000 units in the pipeline over the next 2 years. Riyadh commands the highest rental upticks. Is this influx of supply going to be enough to stabilize prices for residents, or is demand just going to keep outstripping itself?
The new directive to cap rental increases in Riyadh for 5 years is probably the most critical factor for price stability.
Right.
The influx of 105,000 new units, it will influence the initial asking price for vacant properties. The demand for housing in Riyadh is going to remain incredibly strong. There's no question about that. And this new supply is essential to absorb a large portion of that immediate demand. Without these new units, the starting rent of new contracts would be significantly higher, to be honest. So this new supply is going to help moderate the entry point for residents signing new leases. That rent cap is the primary tool that will stabilise those rents. There's no question about that. But the underlying demand is going to stay very high. There's no question about it. Whether or not the supply can meet that demand, I can't comment on that at the moment. It really is an unknown entity, for want of a better term. There's plenty of supply coming online, as we've said, in the next 2 years, but is it going to be enough? It depends how the market shifts, what the projects, how they progress. If they're in line with the 2030 vision, then, which they appear to be, it's still going to be tight. There's a huge demand here. And of course, elsewhere outside Riyadh, market forces are going to continue to dictate. It's simple as that. You've got to bear in mind, there's a huge percentage of Saudi nationals that are under the age of 14 at the moment. I think it's something like 34% of the Saudi nationals are under 14. Well, of course, as they get older and they start to come of age, they're all going to want to live in their own accommodation. So that, and lots of those guys are in Riyadh. So, there is a huge supply that's forecast. Is it enough? How long's a piece of string, I think, is the honest answer.
No, fair. Unfortunately, I have to ask these questions. But that's so interesting.
Fair enough.
Saudi nationals at 34%, was it you said, under 14, so in line with 2030. It's going to be a very interesting time for sure. How about the recent reforms to the white land tax, Sean, influencing developer behaviour? Is that going to mean more frozen land hitting the market for development, do you think?
It's starting to get unlocked, that's for certain. Nobody wants to pay those taxes, additional taxes, and they're considerable, to be fair.
Right.
They are changing behaviour. I was talking to one Saudi national 2 days ago, actually, and he was saying that those taxes are crippling. 10% of the value of the land per annum if you don't develop it. So yes, it is having an impact. Whether it's going to have a massive impact going straight away, I'm not too sure. A lot of people don't know what to do with their land, if the truth be told at the moment. there's something that Cavendish Maxwell does quite a lot of is the highest and best use case scenario, strategic consulting, and we help people work out what they can do with that land, or even an existing asset. If they want to knock it down, they're going to redevelop it, or it's an empty asset and maybe it was built in the wrong asset class. What should it be repurposed to? And we often help with that decision-making process through a consulting process. The trend at the moment seems to be mixed use, so that maximizing that land value with integrated communities. So I think it's started the ball rolling, and I think it will continue to roll this year, definitely, because nobody wants to pay those taxes.
No. As we look towards the end of next year, your figures in the report, 52,400 units expected to be delivered across Riyadh, Jeddah and Dammam. What should potential home buyers and institutional investors be watching most closely?
That's a really interesting crystal ball question. However,
I've got more of those if you want them.
Buyers and investors should focus on location-specific supply risk, absorption rates, product segmentation, rather than the headline delivery numbers, to be honest. Home buyers, affordability and financing conditions, they're always going to be key. Mortgage rate trends, they're going to influence affordability and sales, no question about it. For institutional investors, rental sustainability is going to be essential. Tenant depth and regulatory execution around foreign ownership, which is still working itself out, to be honest, will matter far more than short-term price movements. Not all parts of the market are going to perform equally anymore. There's no question about that. So people have to be careful about what asset selection they make, particularly the institutional investors. You want me to summarize that in a soundbite? Watch delivery versus absorption, foreign ownership rollout, and mortgage rate trends. They're going to define the market dynamics for 26.
Okay, well, I was going to ask you, I had a couple more questions I wanted to throw at you, and really just general thoughts. I hate asking for predictions. I very often do. I don't really like doing it, getting people to offer predictions. It's not really fair, but I'm interested generally in the Saudi residential market. If I can ask you about that overall, and then maybe a little bit on Riyadh, then Jeddah, and then Dammam. I mean, according to your report, the market in Saudi Arabia displayed varied performance, albeit pretty strong, pretty positive performance across major cities Q3 2025. Now, I get that you see the market as entering a transitional phase at this point in time. But if you were to look ahead and I was to say to you, how do you anticipate characterizing the market? I say to you, so what's the Saudi residential market like? What would your kind of two-liner be, Sean?
I went to Cityscape in Riyadh. It would have been just before the end of last year. And if you wanted to know what the state of the residential market in Saudi Arabia was, you just had to be at that exhibition.
Right.
I was dumbfounded when I left the exhibition at, let's say, 5 o'clock, 5:30 every night, by the number of Saudi nationals that were streaming into that huge exhibition. And it was something I've never seen before. And the events in Dubai used to be big, but this paled that into insignificance. The number of Saudi nationals that were streaming in to buy residential property was mind-blowing. The Saudis have got the residential real estate bug. There's no question about that. And I think the residential market is going to thrive for the foreseeable future. Given the young age of the Saudi population, that's going to continue for a considerable number of years. And with the appetite for, let's say, more Western, and I don't like that term, but it's a reality. The types of development that are being built now are far from the traditional stark high-rise towers for apartments or not gated, walled villas where multiple family groups would live in one large villa. That's all history now, in my opinion. We're now migrating to multi-use developments where there are different types of residential accommodation in one environment. So there will be apartment blocks and villas and townhouses, etc., open spaces, retail and leisure facilities, sports facilities, all in one master community. Dubai's been doing something similar, and Saudi certainly is swinging and maybe taking that to another level. And I think that's where the residential market is going in Saudi Arabia. Does that answer your question?
No, it does. It's so interesting because it marks, as much as anything, there's a demographic shift happening. There's also, I think, from what you're saying, something of a cultural shift happening, perhaps a wider community feel almost.
There is, but they're still maintaining their cultural identity. There's no question about that. If you go to some of the retail and leisure developments that are now up and running in Riyadh, for example, they are absolutely stunning. You can equate them to Dubai Marina, that sort of area, retail. Yet when you go there in the evening, which is obviously when they're most busy, 80-90% of the ladies are still in their traditional dress. There are family groups of Saudis with young children, all in traditional dress as a family group. So I think the cultural identity is still being maintained, despite the fact that the setting is changing slightly, if that makes sense.
No, it does. It's just so interesting to hear. You're on the ground, living through this, I suppose. No predictions again, but given the growth in Riyadh, particularly in 2024, affordability does remain an issue. I'm interested in a little bit more in your thoughts on the government, the 5-year rental freeze last September, how that was received, and also how effective it's being seen, is seen to be in addressing those affordability concerns so far.
Well, I think the renters themselves, the tenants, were very pleased.
For sure.
However, the landlords maybe not so. And I have no doubt that it's got to settle down, Tim.
Right.
It's a new law that's been implemented very quickly. And yes, it does have to settle down. What the impact could be on new property rental prices that are hitting the market really is yet to be established. People could be offsetting their potential losses or reductions for 5 years by setting a rent now. We've not really seen much evidence of that to date, but that will probably play out by the time we produce our next report. Or maybe it might take 6 months, I think, to settle. I can't forecast anything at the moment. I've got my own personal views, but it would be wrong of me to articulate them during this call, to be honest.
Okay. We haven't talked about Jeddah very much at all. Do you, in terms of signs of an uptick, perhaps even a return to somewhere close to 2024 levels seen in Jeddah, any expectations there?
Jeddah is... There's plenty going on in Jeddah. There's no question about that. And I personally, the numbers they're okay. I don't think there's going to be a huge problem in Jeddah. There's still quite a few projects that are forecast for Jeddah. Obviously, it's got the advantage of being on the coast. And from a residential perspective, that's always a bonus. Yeah, I'm not overly concerned about Jeddah. There's been a bit of a downturn last year, but it started to pick up in Q3. So I think I personally, and looking at the numbers, that's going to continue.
I'm a little bit afraid that I'm painting this in a negative fashion, and I'm not, because the figures are overwhelmingly positive. I just think it's interesting comparing 2024 to 2025 and looking ahead. It's the usual thing, I think, at the beginning of the year. in lots of interviews. Final thing I wanted to ask you, robust demand seen last year in Dammam. We've spoken about that. The more affordable option of the three main cities you have examined in your report, more of the same going forwards?
I think so.
Right.
I think so. Given everything that's happening in the eastern region, there's no question demand is going to continue to grow.
Do you know what, Sean? I've really enjoyed talking to you this morning. Very general, I know, but I appreciate you joining us. Sean Heckford is the Director of Built Asset Consulting at Cavendish Maxwell, based in Riyadh. Thanks for coming on.
Tim, thank you very much and have a good morning.
Do appreciate it. Thank you. It's the Morning Drive. This is Mira Business FM. Like and subscribe. It's always appreciated if you can do that. Wherever you find us across socials, you can get in touch. Let us know what you think. And everything we do is available to listen and or watch. Again, find us where you get your podcast from. Search Mira Business FM.
Mira Business FM, your daily guide to the markets, money, and more.
Good morning, it's 9 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the top headlines. The Sharjah Chamber of Commerce and Industry has met with the Vietnamese trade delegation to discuss expanding economic and investment cooperation between the two countries, according to the Emirates news agency VAM. The talks focused on strengthening private sector partnerships under the UAE-Vietnam Comprehensive Economic Partnership Agreement. Officials noted that the trade between the UAE and Vietnam reached around $7 billion in the first half of last year, with UAE non-oil exports recording strong growth. Discussions also covered opportunities in logistics, manufacturing, pharmaceuticals, smart technology, food production, and supply chains. Both sides described the visit as a strategic step toward deepening business ties and increasing bilateral trade, with Vietnam highlighted as a key gateway to wider Asian markets. Kuwait has announced a major shift in its oil policy, saying it will invite international oil and gas companies to help develop recently discovered offshore hydrocarbon fields, reversing years of resistance to foreign participation, according to an article on the National News. Kuwait Petroleum Corporation plans to work with global partners to develop new finds, including large discoveries at yields such as Al Jalaya and Al Nukhata. Officials say involving overseas firms could help raise Kuwait's oil production capacity to 4 million barrels per day by 2035, up from the current levels of around over 2 million barrels. Political changes have eased long-standing barriers to foreign involvement in the upstream sector. Kuwait also continues joint development with Saudi Arabia in shared areas like the Neutral Zone and the Dura offshore field. Moving on, gold and silver prices rebounded on Tuesday after suffering a historic sell-off, pulling global stocks and funds linked to the metals higher. Spot gold was last up about 5.6% to $4,930 per ounce. Gold futures gained over 6%, hovering at around $4,949. Spot silver rose about 6% to trade at around $84.29 per ounce. Silver futures were up nearly 10% at $84. The moves marked a slight recovery from a decline on Monday that came after a fall of nearly 10% of gold on Friday and a 30% collapse in silver prices that marked the metal's worst one-day performance since 1980. Mining stocks and exchange-traded funds listed across the globe also notched gains as the metals continued to rise on Tuesday. That's according to CNBC, reporting via MSN. And that's the news for now. I'm back with headlines at 9:30. Follow more news on X, WhatsApp, Twitter, and at mirabusiness.fm.
This is Mira Business FM. It is real estate next. Lots to talk about this morning as well. Mario Volpi is our guest, Senior VP for Investment Advisory at Allegiance Real Estate, and the columnist from The National, and a podcaster, and he's just multi-talented. That's next at Mira Business FM.
Business FM, Dubai's home of business radio.
Mira Business FM, the morning drive with me, Tim Elliott, and real estate this morning. Every Wednesday morning, Mario Volpi is here, Senior VP Investment Advisory, Allegiance Real Estate, and many other things besides. Just the real estate man about town. That's a good intro for you. The real estate man about town.
Good morning, Tim.
Yeah,
Morning.
nice to see you. How are you feeling this morning after another?
Jaded.
Yeah,
a bit jaded. Only 3.5 hours sleep, as we know.
Yeah, not a great result for your boys.
We came back from a really good, resounding victory over your team, which I wasn't going to mention, but that's the only thing I can hold on to at the moment, to a really disappointing night. I mean, to sort of stay up, watch that, and then go to bed at 3 a.m, and then have to be up for this is dedication.
I thank you for that. I mean, you could have called in sick and just said, "Look, my heart is heavy today."
I don't know whether I mentioned this before, but I think I hold. Well, I want to say I'm a record holder in all my years of working, and I started working when I was 18 days away from my 20th birthday. I have never taken a day off sick ever. I've been sick. We have mentioned this. We have, haven't we? I'm sure we have.
But I mean, I think
could
it
never
should be
call in sick.
This should be screamed from the rooftops
No.
because it's kind of odd as well.
It is odd. Yeah, actually.
Yeah.
And ironically, sometimes when I have actually been really ill, it started like on a Friday evening, and by Sunday night, I'm okay. so weekends ruined.
Ruined weekend.
But yeah, no, I've never actually taken a day off sick.
You should do that. Though you should just have a
Take a
mental
day off
health
sick.
day, just to see what it's like. You'd be very uncomfortable though, wouldn't you? What am I missing?
Yeah, I
You'd
would
have
feel
FOMO.
guilty.
Yeah. Okay.
Yeah.
So that's you probably could get a Guinness World Record for that if you could prove it.
I googled it. I'd probably be given the longevity of my sort of career and all the rest of it. I think I'd be in the sort of top 10 of those stats. So who knows? I mean, there might be people who, like me, who've never even mentioned it, and people don't know. But
what do you think of people? Because in every office, in every organisation, wherever you go in the world, there's always one person that at the drop of a hat will be, I
got
sneezed.
soap. No, I got soap in my eyes when I washed my hair.
Yeah. What do you think of people that do that? I mean, I think there are a lot of chances around.
Well, given my stats, I just think they're taking the Michael. I really do. You know, unless you, and I don't want to say unless you really are dying. Of course, there's the other thing that people don't come to work because they don't want to spread their germs.
Yeah.
And I get that, especially HR. They always say, "Oh, you stay away if you're not feeling very well because you could obviously give it to other people." But I don't know. That's
not
just
your
how
way.
I am. Well, no, that's just how I am.
You're just like infect or die.
Yeah. I mean, I like to spread the love. So there you go.
Oh dear. So lots to talk to you about this morning. A couple of things I wanted to do before we get into the meat and veg, if you like, of our discussion. Dubai Loop contract signed yesterday. Big deal, this, I think. I mean, this is the Elon Musk-led high-speed underground road system. So it's around kind of DIFC and Dubai Mall, and it's an alternative network. But it's now been signed. 19 stations, 22.2 kilometres in total. And it's going to cost 565 million dirhams.
Yeah, we talked about this on the podcast and obviously on the show here. And it's actually great to see that it will come to fruition, and it isn't just chatter, as it were. And it's going to be an amazing amenity or addition to a very central part of Dubai. You know, the business district there is well known. Recently, Sheikh Mohammed himself announced further investment into DIFC and its surroundings. So, you know, I always have to look at it from a real estate point of view, and from a real estate point of view, the surrounding areas, I guess, of, you know, downtown DIFC. There are some residential units there, but it tends to be more commercial. And a newer area that's formed, which again I think we spoke about it on the show, is Jumeirah Garden City, which was known as Al Satwa. Now it's funny because we've got a project there that we're trying to sell. So this is the shameful plug coming up. But what I have been saying to the agents is, you know, ensure that people know that with this investment coming into DIFC initially. and now this has been, formally rubber stamped, if you like. There's going to be more people coming to work in the DIFC area, the Central Business District, or downtown. And this is just an amazing addition to the transportation system. Being underground, obviously, it's going to be fine, clearly, all year round. And it means it's walkable as well, as I understand, if it's that particular one. Because there were 2 Dubai loops, and there was a little bit of confusion. Maybe this is just the transportation and you cannot walk it. But either way, it's just adding another transportation dimension to that area, and it's being regenerated. So Jumeirah Garden City is being regenerated, and it's the area basically behind Sheikh Zayed Road, and sort of down from the sea where La Mer is, as it were, or where La Mer used to be.
Right. It's kind of down towards Union House, isn't it, where the Federation Agreement was signed.
If anybody's thinking about investing and trying to get into certain areas before, if they really take off, then they really should look at this area, because whilst I'm going to say it's a bit of a building site right now, because clearly they are redeveloping. There's lots of low-rise buildings there as well, lots of movements. But it just means that people will be able to live very close by to these centres like the IFC and downtown.
That's right. I mean, anything you can do in that area to relieve traffic, because it can be, it's so busy and so popular. Yeah. These are tunnels, by the way, 3.6 metres in diameter. Do you know the thing that surprises me about this? It's going to be done in phases, but phase 1 of the project, so the first, I don't know how many stations, but a number, 1 year to complete. The whole project, in theory, is a 3-year project. It's not long.
It's not long. I seem to remember that they were announcing that it was going to be live in 2026. Now, I might be wrong there, because there's so many stats going on in my heads at the moment, and especially we speak about this in the past. But things change, so it could be that it was due to be. They've looked at the plans and said, look, that's not possible. Plus, they're going underground, so there's going to be boring, and I think they've signed it with a company called Boring.
It's a Boring company,
it's a dreadful name.
A dreadful name, but
it does what it says on the tin, doesn't it?
Exactly right. No, that's the truth. No, that's good. And of course, Satwa, you're talking about my old hood there. I still feel, I look back at living in Satwa, I lived there for a few years, long time ago. But whenever I go to Satwa, I always think, I wish I still lived here. I really like living there.
Well, it's funny, the very first place I went to work in what brought me to Dubai from London, had their offices facing Sheikh Zayed Road, actually at what then became the foot of the sort of escalator for Business Bay Metro, because they were there in sort of the early, I think it was the early 2000s, and the metro station obviously opened in 2009. So that office didn't have obviously a metro station. When they put that there, it was a bit of a goldmine, because there was a lot of walk-in traffic, and the area behind where we parked, all that was known as was Satwa.
It was, yeah.
So it's basically kind of between the City Walk and where you're talking about now. So. Yeah, I mean, look what they've done with City Walk. I mean, that's an amazing place. Boulevards and very sought after and expensive. Prices have gone up there. So I suspect that little old Satwa or Jumeirah Garden City could be a little gem.
Yeah, let's see what happens. It wouldn't be a surprise. Other thing was, I'm reading the paper online yesterday, all right, and I'm reading a story. It was The National, who you write for, and this is what is it? Well, I can't remember the name of the article. It's a series. It's a weekly thing. My favourite place to rent. It's called something like that. But this is about somebody who's overjoyed living in their dream house, and I think it was Victory Heights. So much sought after area. 5-bedroom villa there, ultimate place. Looked nice, but it seemed really overpriced to me. 390,000 dirhams a year. I mean,
5 bedrooms?
5 bedrooms. I mean, I guess that's what they go for. And I'm thinking, oh, steep. But this person was really, really pleased to be living there. And I thought, kind of, what price? Happiness, really.
Yeah, look, on paper, 390,000 is a lot of money, and obviously it would cover the table here, and we'd be counting it all day type of thing. But actually... Villa prices have gone up tremendously because of all the families coming over, or should I say all people coming over and then bringing their families. And they're much sought after, and they don't really, they're not building, they are building now, but there was this period where they weren't building so many villa communities, because obviously it's very flat.
Sure.
Yeah? A developer will make more money in building a tower, clearly, because he's using up less land space. So yeah, there is a shortage. Victory Heights is a very well established villa community, obviously with the Els golf course there as well. So it's posh, it's up there, and they're nice houses. So when you look at what else that buys you, it's probably about right, to be fair. But you're right. It is you've got to be earning a lot of money, let's put it that way, for you to be able to afford that. But of course, there is that argument that some of these executives might have it paid by the company. Although even that is starting to wane a bit. I remember when I first came to Dubai, it was what we call a hardship posting, in inverted commas. Now, they're not giving anything. You'd be lucky to get a salary type of thing. That's about it.
Not so much,
gone.
I suppose. But it seemed like a lot to me. But then, this person's happy there, so who am I to say? But it made me think, and then I came across your column. This is one of your columns. And again, this was yesterday in the National. The question sort of resonated with me. And it's that conundrum of, rents are high, but how can I buy? It's the eternal question. Here was the question that somebody wrote in, JA Dubai. I don't know who they are, but it says, the question was, my rent has increased quite a lot since 2021, but buying still feels out of reach. It's a very familiar story. And then it was kind of a heartfelt, almost plaintive. How are families supposed to stay in Dubai for the long term anymore? And I felt a little bit sad about that. But it raises a really good point, I think. And it goes back to, you're paying this much for a villa, but you still can't get the down payment to get yourself into the market. It's a tough one.
Yeah, it's absolutely. And the advice I gave pretty much was just from the heart, that it is tough, because if you are looking to buy what you need, then sometimes it's nigh on impossible. So, for example, I invested myself, but I never invested in something that I could buy to live in it, because the prices were just too high. So I don't know who coined the phrase, but it's rent vesting. So where you rent and invest. So you're renting, but you still have some money to invest elsewhere. Now, elsewhere could be, you're a family, so the family of whatever, but you potentially have enough money to be able to buy a studio, for example. So you're investing into Dubai without necessarily investing in something that you're able to move into. It was a very difficult question to actually answer, because the JA really hit the nail on the head, because unless you are able to move in areas that then will cause you problems from a point of view of schools, point of view of traveling, it's very tough to actually get onto that ladder. But look, Dubai is a victim of its own success now, because it is no longer, just desert. Just look around you, how amazing this city is, this emirate is, and not just Dubai, the whole of the Emirates. So there are still pockets of places that you can find that are, dare I say, a little bit more reasonable. There are developers that are a little bit more reasonable in price. But yes, it is tough. The payment plans, however, are very good. They are, in fact, interest-free. I nearly said tax-free then. Interest-free. And I was surprised the other day to actually learn just how many developers are still offering post-handover payment plans. This is where you've paid a certain amount, often between 40 and 60%. You get the keys, and then the remaining 40 or 60%, depending on what the first part was, can be paid over a period of 2 years or even 3 years. What that means from an investment point of view is that you you take ownership of your property, and if you are renting it, effectively you can rent it at 100% of whatever the rent is, having only paid 60% or 40% of the value. So the first few years are very, very good. So what I'm trying to say is that there are definitely developers out there that are trying to help. There's obviously the first-time buyer scheme, which came out last year, which will help to get preferential rates on the mortgages. You can, you can pay the 4% over a period of a year, rather than having to pay it, all up front when you do the OCUD, whether it's off plan or whether you do the transfer when you're buying secondary. So, but this question was a very difficult one, as I mentioned, to answer, and hopefully I gave some comfort that potentially there are still things out there, but it is a tough one, because if you're needing to buy something that fits your requirements, you might have to continue to rent. But I mean, I think rents will come down soon. When I say soon, they have to, with all the number of units that are going to be handed over. By the way, they've all been bought, right? They're all sold. So, so the only market that it can affect has got to be the rental market. Properties that are handing over will be left empty. They're going to be used as holiday homes for themselves. They're going to be used as holiday homes to rent out short term, or they're going to be used to move in, obviously. And the fifth one, long-term renting. Those are the 5 elements. So a lot of people will obviously want to rent out, especially if people have bought them from abroad. They don't live here. So that stock will have to have an effect on prices, maybe softening, in the months or the years to come.
All of that's borne out by latest figures as well. As a headline at the weekend, Dubai real estate records highest ever January transactions peak. And I was talking about this yesterday with a guest on this program, but I'm interested in your perspective, because nearly 17,000 sales deals completed last month in January. That's up just over 20% from the 14,000 last year. So it's a huge surge of activity. And this is DLD, Dubai Land Department data, showing total real estate transactions in January, 107.96 billion dirhams, almost double, just under 60 billion recorded in the same month last year. This is just a series of superlatives, isn't it?
Yeah, look, Dubai never ceases to amaze me how it keeps sort of reinventing itself, and apart from maybe a month or two where we might see similar growth, it's got to be down to the population. We don't hear monthly, just like every month we know whether petrol prices are going up or down. Yeah, they announce things like that, but the population is not announced on a monthly basis. So people have to live somewhere. Dubai does an amazing job on the world stage. I've said it before. So clearly, if people are not coming here to live here and therefore taking that stock, the rest have got to be investors. And that is why 65, 70%, especially of last year, the split was between off-plan and secondary market. So the off-plan market is driven very much by the investors, and mainly abroad. So because it does a great job in selling itself, of course, people are curious. We do over 200 road shows at Allegiance every year, and we're going to far-flung places, and that's a lot of road shows, and people are super, super curious. Yes, we sell also at those events, but there are times where people have just absorbed it because they've either seen it on TV or they've read about it. I'm talking, obviously, Dubai. And then all of a sudden they say, oh, I didn't realize that Ras Al Khaimah was just there, or I didn't realize Abu Dhabi is just there. It opens up another thing. Oh, I didn't realize there's going to be flying taxis. I didn't realize that road is going to, so getting around is, soon we'll be talking about the flying taxis. They're coming.
We're already talking about the flying taxis, but I mean,
you've seen them,
having experienced it.
Well,
yeah, exactly right.
Yeah.
Well, if I can afford it, but that's a different matter. Who knows what they're going to cost? It's so interesting. We've got to go to the news now. We'll keep talking. Mario Volpi is here from Allegiance Real Estate. He's Senior VP for Investment Advisory. And a note, actually, if you have a question for Mario, you're very welcome to get in touch. WhatsApp.mira.fm or info@mira.fm. Easiest ways to do it. It's very straightforward. This is Mira Business FM.
Mira Business FM. Dubai's home of business radio.
Good morning, it's 9:30 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the top headlines. Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al-Tayar says that Joby Aviation will exclusively operate the service for 6 years with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, according to Gulf News. The RDA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. Moving on, the Sharjah Chamber of Commerce and Industry has met with a Vietnamese trade delegation to discuss expanding economic and investment cooperation between the two countries, according to the Emirates news agency WEM. The talks focused on strengthening private sector partnerships under the UAE-Vietnam Comprehensive Economic Partnership Agreement, and officials noted that trade between the UAE and Vietnam reached around $7 billion in the first half of last year, with UAE non-oil exports recording strong growth. Discussions also covered opportunities in logistics, manufacturing, pharmaceuticals, smart technology, food production, and supply chains. Both sides described the visit as a strategic step toward deepening business ties and increasing bilateral trade, with Vietnam highlighted as a key gateway to wider Asian markets. Moving on, gold and silver prices rebounded on Tuesday after suffering a historic sell-off, pulling global stocks and funds linked to the metals higher. Spot gold was last up about 5.6% to $4,930 per ounce. Gold futures gained over 6%, hovering at around $4,949. Spot silver rose over 6% to trade at around $84 per ounce. Silver futures were up nearly 10% at $84. The moves marked a slight recovery from a decline on Monday that came after a fall of nearly 10% for gold on Friday and a 30% collapse in silver prices that marked the metal's worst one-day performance since 1980. Mining stocks and exchange-traded funds listed across the globe also notched gains as the metals continued to rise on Tuesday. That's according to CNBC reporting via MSN. And now to the market update. Bitcoin today is trading at $76,382. And for those tracking remittances, 1 dirham equals about 24.61 Indian rupees, 75.90 Pakistani rupees, 33.24 Bangladeshi taka, 16.05 Philippine peso, 12.79 Egyptian pound. Meanwhile, 1 British pound is equal to 5.03 dirhams today. That's the news for now. I'm back with the headlines at 10. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
It's Mira Business FM. We're continuing with real estate this morning. Mario Volpi is with me, Senior VP Investment Advisory at Allegiance Real Estate and all-round real estate man about town. We have been talking about a little bit of football news, the Dubai Loop, also considering if your rent has gone up, but buying still feels out of reach, how you feel about that. Very familiar story. And in the papers this weekend, Dubai seeing real estate records once again, the highest ever January as transactions have reached an historic peak. up 20% from last January, and in financial terms, up something like 45%. Other thing, Mario, thank you for sticking around, by the way. Total real estate transactions 2025, 917 billion. That's the much quoted figure. A level that was initially targeted for 2033. Attained in 2026, as you well know, of course. So the suggestion is the market could and very likely will soon surpass $1 trillion dirhams in annual trading value. It's just globospheric. If that's not a word, it should be.
Globospheric, that's amazing.
Yeah.
Good word.
Thank you.
Yeah, it's far ahead of itself. Like I said, it's a victim of its own success. And Dubai, UAE in general, will continue to look at how to keep this ball bouncing. I mentioned prior to the news break there about the first-time buyer initiative. That will be further developed. I strongly think that, see, right now it's only if you hold an Emirates ID, if you're a resident in the Emirates and have never bought a property in Dubai before, you're eligible, along with the fact that you have to be over 18, etc. But I've got a funny feeling that the government probably will open it up to the rest of the world. Why wouldn't they? Because there is a pool of people sitting, I'm not going to say on the fence, but certainly pondering. You know, we've heard about Dubai, we're hearing good things about it. You know, maybe we should, dip our toe in, maybe we should come and see. Many people even buy without seeing. But an initiative like the first-time buyer one, that then gets opened up to the rest of the world. I mean, it's just going to bring in more people into it, and that's why I think we are ahead of ourselves. It's initiatives like this. It's spending on infrastructure. We mentioned that as well. I mean, it's just an amazing city. It's an amazing emirate, and it's forever improving itself. I always say it's run like a company. It's not really run like a government. And you know, the CEO, Sheikh Mohammed himself, will sit, with his board members, the council executives, to say, right, how can we improve things? How can we improve? And not just for Emiratis, obviously for all residents of Dubai and the wider UAE. So that is why I think we're ahead of ourselves. And despite perhaps geopolitical headwinds around, Dubai always comes up smelling of roses whenever also there's conflict. So that's going to be a topic in next week's panel discussion that I was telling you about with Cavendish Maxwell. And I've got stories where last year, as you might remember, and I might be going a little bit off topic here, but it is pertinent to describe exactly how Dubai bounces back. We had a group. There was 3 Italian ladies who wanted to invest. They put their expressions of interest down on a particular project in Dubai Islands, which is an amazing master planned community. And they then left. And whilst they were in the air from Dubai to Italy, we had the situation with US and Iran, and then of course the backwards and forwards, and Qatar got involved and everything, as you know. Yeah. So when they landed, they thought, my goodness, what have we done? This is not going to be a good investment. And they called up, I think it was the very next day or the day after, to say they would like to withdraw their expressions of interest, which EOIs are 99.9% are refundable anyway, because they haven't actually bought anything. So we organised that. We tried to explain, look, that's fine, it's your choice, but other people that have done that in the past have lived to, I wouldn't say regret it, but wish they hadn't, perhaps. And anyway, fast forward about 3 weeks, 4 weeks, something like that. It was about a month later. One of the 3 ladies themselves unilaterally decided upon herself to make a call to say, that property that we were buying, is it still available? Can I can I do something with it? And we said, well, good news and bad news. The good news is, yes, we can do something. The bad news is, no, that one's no longer available, because the minute you withdrew your EOI, there are other people who understand what the market is like here in Dubai, and it's gone. The bad news is that whilst I can sell you something else, it's actually more money. So she had to pay more for a very similar unit. And actually, I saw her in December of this year. She came to the office at Allegiance with other investors, and she's extremely happy. So, look, it's not for everyone. I've got another couple who, again, are thinking about, they're from Switzerland, they're thinking about investing, and I got a text from them yesterday saying that they're going to pause just to see how the situation, the potential situation might pan out. And I said, look, it's understandable. I didn't at that point go into, yeah, but my other clients have done this, that, and the other. I thought, look, just let them, because she did say that she would be back in touch soon. I'll keep in touch with her. But again, the same is going to happen. The budget that they have for a specific property now will not be the same, because, like I say, we always sort things out. Look, it might be different this time. I hope it isn't. But generally speaking, history has shown that the Emirates have
Can rely on, isn't it? Nobody knows what's going to happen. That's fine, but historically, Dubai seems to buck the trend. I think that's really the point, isn't it? That's generally the case. Let's look at some of the things that I know you've been looking at in detail. A few questions for you. Last week. It was last week, maybe the week before. It was last week. Dubai and Ajman introducing new rental dispute resolution frameworks, almost sort of back to back, really, Mario.
Yep.
And this is Dubai enhancing its conciliation service through the RDC, which is the Rental Disputes Committee. Ajman has now established a dedicated rental dispute resolution centre, so an RDRC. What does this tell you about where the rental market in the UAE is headed?
Well, if we look at the UAE in general, it's basically showing us that it's maturing, because regulators are moving away from slow disputes, and they're moving towards faster, fairer, and perhaps more transparent resolution systems. Now, in Dubai, the focus is now more on amicable conciliation, legally binding settlements without this need for lengthy court battles.
Right.
With Ajman, this creation of this dedicated rental dispute centre is going to fast track cases and is going to strengthen legal certainty. Now, for landlords, this means quicker outcomes and reduced risk. For tenants, it means clearer protection and access to justice. And ultimately, these reforms improve the confidence, the support, rental market, stability, and makes the UAE a more attractive place to live, invest, and obviously do business in real estate.
Here's a question for you, and this is Trish emailing. I've been deciding between Al Fajan and Motor City. 2-bedroom apartment is what Trish is looking for. Any insider info from our man about town when it comes to real estate on which area is better in the long run?
I assume she's looking at then what capital appreciation, because if you're buying, what Al Fajan is not next to Motor City, so there's obviously two areas she's highlighted.
I guess either a real fan of Fajan. I mean, they're quite different as well.
Exactly.
But maybe you just like the areas.
So I think Al Fajan is more established as an area if we look at the master plan, and of course you've got the metro system running sort of between Al Fajan and Discovery Gardens.
Yep.
So it's well connected. When it comes to Motor City, ironically, it's where I work. Motor City is where Allegiance is, and it's an area that sort of stalled, I think, in the past. You've got the Autodrome. There's swathes of towers and places.
The big tower by the end of the Autodrome. Is that where you're sort of opposite? The Waitrose little shopping centre?
Yeah.
Oh, you're in there.
It's Control Tower. It's the only commercial tower there, of that size. But there are towers that were started and then never finished. So you've got these skeletal structures, if you like, scattered around Motor City. Uptown Motor City is very, very nice, but there are now all of a sudden, because Union Properties are the master developer for Motor City, they had problems sort of in the early 2000s or around the sort of financial crisis. They bounced back, and as a result, they've now put into place a lot of projects that they want to either revisit or start again from scratch. So, I guess if you're looking at it from injecting life into an area, I think Motor City probably just nudges it for me. If you're looking at more connectivity and indeed location from the point of view of where the city is shifting, then Al Fajan is probably better, because if you look at Palm Jebel Ali and go downwards, that sort of Jebel Ali corridor leading all the way down to the Al Maktoum airport, which obviously will be the new airport, is I think where the shift is happening. So really she needs to weigh up what she's trying to get out of it. I think both are very good prospects. Perhaps shorter term it might be Motor City, but perhaps longer term it might be Al Fajan. Spoken like a true Libran, given the balanced view and not actually answered the question.
That's why you're here. You know that. That's why we invite you back every week.
My own answer there.
But there's
I hope
something.
that helped.
There's something about Motor City. I think I like the kind of the high street thing.
They've got amazing shops.
I just love it.
They've got. When I say shops, they tend to be more sort of food and beverage outlets. I have to say.
True,
Lots of places to eat and drink. But there are outlets there. Being a bit of a petrol head myself, I do like, and especially from Control Tower, we can actually see the track. And there's, when the Porsches go round, with the car, they go round during the week. It's always nice to hear that little bit of a roar as they go round. I've done it myself in a single seater. It's very, very good. But when I look further around, there's lots of, as I say, land that is either being prepared for these projects, and it's not just Union Properties. There are other developers developing there as well. So it's one to look out for. I didn't realise just how close it is to where I live, because I thought it was miles away, like anything. But I'm going against the traffic, so it's only a 15-minute drive from JBR to Motor City. Because everyone else is going the other way.
Yeah, for sure.
And
pretty easy
coming
commute.
home, it's the opposite. It's great. Traffic obviously is when you hit JBR, you then have a bit of traffic in the evening. But it is technically only a 15-minute drive.
Pays your money, takes your choice, don't you? I suppose. Here's another question for you. This was there was a comment for you actually as well. This is Fudge 104. Which is one of the great nicknames. I'm assuming it's a nickname
Sounds
rather
like
than
a great
real
radio
name.
station, doesn't it?
It does. I never miss an episode with Mario Volpe. Not a question, but an actual comment. Hee hee.
Okay, well that's very nice.
Nice.
I don't know a Fudge, so it can't be any family member or anything. Great name. Yeah, great nickname.
Fudge
Thank
is
you.
now your friend.
Thank you.
So there you are. Prince, I read it's better to buy a villa than an apartment. I mean, this is very loaded, this question, but I'll read it to you. Budget-wise, I can only afford an apartment. Does this mean I should just rent rather than buy until I can afford a villa?
I wouldn't.
No.
Honestly speaking, I wouldn't. If you can afford to buy now, I mean, remember you're asking an estate agent, okay? So the time to buy real estate is always now, whether the market is rising, declining, whatever. If you're buying for the right reasons, it's always now. We're fortunate in the UAE that we're not involved with chains, and what I mean by that is, for somebody in order to buy something, they need to sell something, and the person, further up the chain is buying something else. But so in the UK you have these sort of chains of 4, 5, 6. The longest one I think I had was around 11, and it snaked up and down the country. And if somebody catches a cold at the bottom, the whole thing collapses. Yeah. So we're fortunate we don't actually have that here. But I would not rent if you can afford to buy, because things are improving. You've seen that. Dubai will obviously get to a stage where there will, because what goes up has to come down, or there'll be a period of stability, all the rest of it. But I think the long-term plan for Dubai is amazing. And so if you can afford to buy into that by buying your own home, whether it be an apartment, then just do it. If however he's looking as an investment, yes, it's true that villas have outperformed, but that's only because there's less of them. So it's a scarcity point of view.
Yeah. Okay.
But if he's looking at return on investment, if he's looking at capital growth, you know, the apartments, they're not that far behind in terms of percentages. Of course, they seem much less when you're talking about paying less for them. And of course, every tower block is going to have 300 odd units in it, whereas, you know, villa communities are going to be probably less, depending on the size of the land. Or if it's a master plan community, then there are also going to be hundreds of villas there too. So my advice would be no, don't just rent, because he won't probably save as much as he thinks he can. You know, life gets in the way as well. Holidays get in the way, families get in the way, school fees, you know, all the rest of it. Yeah. So the chances are probably that will be something that he'll never reach. So it's better to grab something, and it will still grow in value anyway.
For sure. I mean, if you feel like it's the right time to buy, it may well be that is the case. But, I mean, only Prince knows, I suppose. Here's John. Need your thoughts. It's an interesting question, actually. My landlord, super nice, out of the blue, sent me a message asking for a copy of my contract because he doesn't have a copy anymore. However, I can't find my copy of the contract. So there you are. Is there anything I should know? Do you think he needs another thing, not really the contract, or am I just overthinking because he might ask for a rent increase? I mean, the contract is registered, isn't it?
Yeah. So I was going to say, if it's a proper contract, it should be on the Ajari system.
Yeah.
And all they have to do is go to their Dubai, the UAE pass, and all their contracts are there anyway, or contact Ajari, and they'll show you where it is. So as far as John, you were saying, yeah, as far as John is concerned, he should be able to find his. I think it is more of a broader question, because I'm wondering what is it that the landlord is looking at. He knows what the rent is because it's being paid, whether in one check or 12 checks or whatever. Mm-hmm. The Ajari contract outlines certain terms and conditions, but doesn't really outline the sort of addendum, as most agents will add to it, that you can't do this, you can't do that, and the do's and don'ts, which, as I say, cannot be put on that. So I'm really wondering why a landlord, unless we're all overthinking it, he just wants it for his files. I don't know.
I mean, it may well be that it's just got lost.
But important to note, I mean, if we're going down the sort of rental increase route or any changes to the contract, the landlord has to give 90 days written notice. That's written right. Can be an email, can be a WhatsApp, but it has to be put in writing. 90 days notice that at the time of renewal, I'm looking to change X, Y, Z. If it's a rental increase, it should state, look, I'm looking to increase the rent, but nearer the time, we'll check out what the Smart Rental Index says is permissible. If the landlord does not give 90 days notice, irrespective of whether the rental index actually does state an increase is permissible, as per the law, it shouldn't be followed through because the 90 days weren't given.
Here's something else for you. This is anonymous, and it's off topic. Mario, you're getting some compliments today. You're gonna walk out of here, your head will be bigger. The way it's going.
3.5 hours sleep, goodness.
Well, there you go. You seem like a nice boss. How do I apply to become a real estate agent under your supervision?
Amazing. That's exactly what I would like. Look, every single real estate company at the moment is hiring, and you know, there are these companies who perhaps only want experienced agents. They're the ones that are really suffering, because experienced agents don't tend to move unless, of course, they've fallen out with their boss or there's some money issues with the accounts or something. So you've got to be at the right place at the right time. The one thing that I say about joining a real estate company, especially if you are new to the industry, is that whilst most agents do the same thing, they advertise in the same portals, you know, they tend to congregate in the same areas, Marina Plaza being one of them, and Control Tower we are. There's millions of us. It's down to who your manager is,
Right.
and if you can find somebody that is supportive enough, that cares about your well-being from the point of view of helping you when things are not going right, then that is a person that you should stick by. I think management is something. Yes, you can learn bits of it, but it's something that is with you. I look at it a bit like a vocation, in the sense that, from my perspective, what I really enjoy, and I guess it's why nurses go into nursing, is wanting to help people. I really enjoy when an agent closes a deal, because I look at that I have helped that person to either reach that level, give him confidence, or her, or guided, because I have been an agent as well. So obviously I've walked similar roads many moons ago. So maybe they don't work, but at least I can give some sort of a guidance. So if this lady would like to become a real estate agent, or is one, and wants to come and join Allegiance, I hope she can send an email and you can put her in touch with me.
Okay, well, we'll certainly do that. I mean, what do you look for? I'm interested in this. Is there a standout characteristic where somebody will walk in and say, Mario, really you want to join the team? What's the thing that makes you think you'll be great?
Yeah, it's a good question, because it really is pigeonholing people, which we shouldn't do, because if you're talking about, let's say, introvert and extrovert, you don't think an introvert is going to be a good salesperson.
Introverts listen.
Well, that's the bit I was going to say.
Yeah.
The extrovert, some people will say I'm like that. I like the sound of my own voice, and I talk a lot. Tend to do more talking than listening. Introverts are the other way round. And what people forget is that when you're pigeonholing people, clients are also introverted and extroverted. Sure. And people tend to gravitate towards their own kind. And I remember when I was in London, I had this Iranian British girl. She was a nightmare. She just talked a million words an hour.
Right.
And she was so in your face, and she was very animated, and blah, 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 like this. And then I still remember, her name was Louise, that was it. And then I still remember Adrian, good old Adrian. He was steady Eddie. He'd come in, he'd have his packed lunch. 12 o'clock on the nose, he'd stop and have his lunch. He was a creature of habit.
Right.
And quite quiet, calm.
Mm-hmm.
And there were some people that would actually call me and say, "Oh, I've been dealing with your Adrian. I mean, is he awake?" So they want to slap him about. And then there are others who said, "Love Adrian, perfect for me." So everybody had this character is good for everyone. Okay, but you've got to be able to try and answer the question in just a few sentences. You've got to be able to connect with people. And I think the best way to describe it is if you enter a room and you light up that room, in theory, you should be a good salesperson, because then people will either listen to you, and if what you say makes sense, they'll trust you. And sales is all about trust.
So at least be an approachable character.
Yes, for sure. I mean, when you go
okay.
to these networking events, don't stand by the wall holding your apple juice and just observe.
Yeah.
Get stuck in and talk to people. That's why you're there.
Well, I can imagine you at a networking event actually being pretty good. Because I'm terrible. I'm just like,
You're the one with the apple juice.
I'm either a million words and making up nonsense, or what do I say? That's not my thing, but you have a talent for it, I think. Final question for you. We've got a few seconds. Why do some property managers ask for my visa copy, not just Emirates ID? And my wife's passport visa copy, Emirates ID. Is that a government requirement for a Jari registration, or is it just overly concerned?
It's overly concerned. Emirates ID is all that is required, because you can't get an Emirates ID without a visa. It's all registered.
Exactly.
So, I think it's just managers being jobs worth, really, to be honest with you. But what to do? You have to please everyone, and as long as the person's not that bothered, just do it.
Whatever gets you through the day, I suppose. Mario Volpe is Senior VP Investment Advisory at Allegiance Real Estate. He's our real estate man about town. That's going to stick, I think. I'm just throwing
Roundabout
things
town.
at the wall now,
Okay.
and that's the current one. The spaghetti dripping. You know where I'm going. Mario, great to talk to you. Thank you.
Thank you very much.
Appreciate it. Mira Business FM news is next.
Good morning, it's 10 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. These are the top headlines. The UAE Ministry of Finance has strengthened international partnerships and discussed the future of fiscal policies at the World Government Summit in Dubai, which runs from February 3rd to the 5th. Minister of State for Financial Affairs Mohammed bin Hadi Al Husseini said the UAE is committed to shaping global dialogue on economic policymaking and building more resilient, sustainable economies in the face of economic, technological, and geopolitical challenges, according to Emirates news agency WAM. Sessions at the summit focused on fiscal sustainability, digital transformation, and the responsible use of artificial intelligence in public financial management to enhance transparency, efficiency, and stability. The ministry also co-hosted a GCC session on economic transformation and fiscal and monetary integration, signing the Memorandum of Understanding with Kuwait to strengthen bilateral relations and promote financial cooperation with Bermuda to expand the cooperation on fiscal policy, budgeting, taxation, and public financial management. Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al Tayer says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, a report from Gulf News said. The RTA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. The Sharjah Chamber of Commerce and Industry has met with a Vietnamese trade delegation to discuss expanding economic and investment cooperation between the two countries, Emirates news agency reported. The talks also focused on strengthening private sector partnerships under the UAE-Vietnam Comprehensive Economic Partnership Agreement. Officials noted that trade between the UAE and Vietnam reached around $7 billion in the first half of the year, with UAE non-oil exports recording strong growth. Discussions also covered opportunities in logistics, manufacturing, pharmaceuticals, and smart technology, food production, supply chains. Both sides described the visit as a strategic step toward deepening business ties and increasing bilateral trade, with Vietnam highlighted as a key gateway to wider Asian markets. The Trump administration is set to unveil its biggest plan yet to secure the critical minerals for everything from jet engines to smartphones. The strategy includes international purchase agreements and a $12 billion U.S. strategic reserve to counter China's dominance. Vice President J.D. Vance will deliver a keynote at a meeting hosted by Secretary of State Marco Rubio with officials today from dozens of countries where supply chain deals are expected, as per an article on Yahoo Finance. The announcement follows Project Vault, a stockpile backed by a $10 billion export-import bank loan and nearly $2 billion in private funding. China, which controls 70% of rare earth mining and 90% of processing, restricted exports amid the U.S.-China tariff war, despite a one-year truce agreed after talks between the U.S. and President Donald Trump and President Xi Jinping. That's the news for now. I'm back with the headlines at 10:30. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
This is Mira Business FM. More news at 10:30. Sahar will be back in the studio. Coming up, we're going to be talking about how Gen Z investors are embracing gold and apps and getting into investing a lot earlier than perhaps previous generations did. Payal Trahan is a partner and senior investment strategist for the Michelle Carby practice. Here next at Mira Business FM.
Mira Business FM, where business comes to talk.
Mira Business FM, it's just after 10 o'clock in the morning. We're talking finance now. A slightly different way of looking at finance as well. And I'm very pleased to welcome back Payal Trahan, who is a partner, senior investment strategist for the Michelle Carby practice. Feels a bit weird, this. I feel like you were here very recently.
I was. Thank you for having me again.
Well, did you even go home?
Oh, I think I just kind of slept in your...
We've just been knocking around the office for a while.
Just a closet hole back there.
Yeah, it's very comfortable and you're very welcome. Look, it's nice to see you. this is an interesting trend, and I know that Michael, who produces this show, got in touch and wanted to talk about this, and I'm kind of interested. So a new trend that's kind of shaping, I suppose, the future of investing in some ways. Young investors taking to the markets, but doing it very differently from previous generations. So here's the background. It's a recent WEF study, World Economic Forum study, survey. 30% of Gen Z, so that's the generation up to about 28 years old at the moment, something like that in theory. That's a bit of a movable feast, but let's take that. They've globally started investing in university or very early adulthood, rather than, I think it's something like 9% of Generation X, which is very firmly my generation, I should admit. Now, in the UAE, young investors are gravitating towards traditional safe haven assets like gold, very much in the headlines at the moment, but they're also using digital platforms like Baraka or Sawa to get a head start in the stock market. So why is that happening? What does it mean for the economy, for the average investor? That's why you're here. And it's yet another kind of theoretical discussion, kind of leaning on your expertise pile. But what is it about Gen Z that's getting them into investing early, or why?
I think this is such a cool topic. I'm going to start with that because I think it's just so important to talk about this right now.
It's a generational shift.
It is, absolutely is. And I think it's, there's a lot to learn from here as well for the previous generations. And I think kind of going back to why is this happening, I thought long and hard about this, right? And I think it comes down to two for me, and it's acceptance and access.
Okay.
Now, if you look at the acceptance side of things, I kind of go back to this, and I said this in the previous discussion as well, is in the pandemic era, what happened really was there was this cultural shift or this cultural acceptance that almost made it seem like investing became a acceptable way to start building wealth, right?
Okay.
And traditionally, if you think about it, our life path and career path has always been, for the previous generations, has always been quite decided, not really flexible, and I'd say linear. But now what we're seeing is life and career path is flexible, it's non-linear, and there's just a lot more acceptance. There's an acceptance for, okay, what's your career? And you might not be an investment banker. You might just be a financial social media influencer, and that is perfectly acceptable. So I think that's one. But I think what also feeds into that is the access. So all of a sudden now you have access to so much information. And I mean, look, I don't know the stats exactly, but I'm pretty sure if you did the stat and you looked at what was the active user subscribers for TikTok in 2020 versus what it is today, I know the number's probably about 140% increase, right?
Okay, makes sense.
Now, if you just put that into context, what you're basically saying is we now have that much more information available to us, which I would say, back in previous generations, you didn't. Your kind of source of information were your experts. Where'd you find these experts? You find them either at your university campuses, you find them either at your job, wherever you're working, who your line managers, who your mentor is, and so forth, or you seek a financial professional.
There's another one. We used to buy encyclopedias.
There you go.
Yeah.
There you go. I had a whole rack of them.
Yeah.
Yeah.
A to Z.
A to Z, all of them.
Did you actually read any of them?
I did. I had to because we didn't have the internet for school projects.
There you go. But that is a huge difference.
Massive. So I think all of these things put together, it just allows for easier decision making. So it's access and acceptance.
Okay, so, I mean, the thing is, I relate to this story just as much as you do, but I think in a slightly different way. I mean, I was completely unaware of anything to do with money or investing for years. And it always seemed to me to be a dark, kind of mysterious world. That other people did that.
Yeah.
Stockbroking, I kind of knew what it was, didn't really. It's still a bit of a dark art in some ways. But I was even advised at school that a potential path for me was the city. I went to school just outside of London, just east in a county called Essex, right? And it's half an hour, 40 minutes to the city of London where everything happens. Lloyd's of London, all of that. And I was told you could get into stockbroking, you could get into insurance. And I remember sitting there thinking, you don't know me, because that's absolutely not me. But it wasn't really for me. Maybe it was fear of the unknown. Maybe it was just not my thing. But then later on, I spent 11 years working for a personal finance publication. So I'm in the sort of media industry. And I wonder if that was kind of me catching up. You know?
It probably is, Tim. I mean,
Could be.
because at the end of the day, when you talk about any investment decision, what is it? It's reading and making an informed decision.
Exactly.
And I think you can relate that to absolutely every aspect of your life. You know, something as simple as, should I buy this property today or not, is an investment decision. Should I spend money on this fancy holiday or not, is to a certain extent a saving decision, ergo an investment decision. So money decisions, as I put them, should never be, you should never create too much of a complexity around them, right? Read and get informed and then make the decision, just like you would at any other decision in your life. But I think even in your case, because I can relate to that, right, is if you kind of look back previously, what was taught to us were the traditional fundamentals. You go to school, you get a job, you save money, you try and buy a property as soon as you can, you step up the property ladder, and that was it. But nowadays, when you sit down, with the Gen Z, there is so much more of a sophisticated discussion around, well, I don't need the property. I'd much rather have my money invested in the markets. It seems like it's going to do a lot more for me than rising property. There are healthy debates around, well, honestly, in the last 10 years, property prices in the UK haven't risen. But if I just put that same money into something like, let's talk about gold, because that's the topic here. If I would have put that over there, I would have probably made a much, much, much larger return, and my money's liquid. So you're starting to hear more of these debates come to the forefront. And this comes from information and education, which I guess is just more accessible to them.
It's also attitude to the information that you receive, because it's straight to your phone. And it used to be that you would sort of compartmentalize things. And I see this with my father, who does things in a very specific way. He's an older man, of course, but there's a time to do the tax return. There's a time to do this. There's a time to take care of whatever investments or to get the bank account sorted, whatever. Whereas now, attitudes are much more, I could do that quickly now on the phone, then I could be doing something else. It's a much more multitasky kind of environment.
Exactly.
And I think Gen Z are very happy with that. Their brains maybe work differently.
Yeah.
You're also younger, so there's less clutter.
Exactly. And I think you're absolutely right. I think what we're seeing now is the ability to kind of really accept that instant gratification. It's like, if I can do this really quickly, I get it done, and then I'll move on to the next thing. So it's almost that follow-through is so much more faster. Whereas back in the day, for instance, buying a property or setting up a savings account felt like a big task, right? Felt like you needed a big gold checkpoint at the end that, yes, I did this.
Well, it was a big task back in the day. It was a few trips backwards and forwards
Yeah.
to set up a bank account. I set up one in the summer, and I went in, spent half an hour, they went through all the checks, it was done.
Yeah.
And I thought, that was easy.
I know, and nowadays you also get told, you could do this online. And you're almost thinking, yes, I could have done this online. But you see, Gen Z knows all about this. And they try to live majority of their life online.
We're like two old codgers here, and you're a lot younger than me. But it is interesting, and there are distinct kind of lines, demarcation lines between the way the generations deal with their daily lives. That much, I think, is fair.
Yes.
And this is all good background for this discussion, I think. But do you know another thing? I remember that when Wi-Fi really started to take a hold in offices, which is kind of early 2000s. 2005, most people were starting to get Wi-Fi in the office. And I remember we had like a little sofa set, and people were starting to take to the sofa, lie on the sofa with a laptop. And I was a bit like, get to your desk and sit and work properly. But why was I like that? And, that has completely changed. So that all kind of drives this. Look, let's get slightly deeper into the topic. In the Emirates, young investors favouring gold.
Yeah.
Lots of people at the moment. It's very much in the headlines. Even after the correction of the last few days, it's kind of the topic on everybody's lips. Silver is there or thereabouts, even though that's corrected maybe slightly more. But is there an element of fear of missing out here, which is something that should set up a few warning bells, I guess, with somebody like you?
Yeah. I mean, look, the FOMO trade was probably the theme for 2024, 2025.
Probably.
It really was. It's all everyone spoke about.
Yeah.
I would say, though, that amidst any global uncertainty, right, be it in any form, the natural response is always to flock to safe havens. Now, we're kind of faced with this situation where we've just seen, and we discussed this last time as well, we've just seen so much uncertainty happen so fast at such a large pace. So the natural response to this was, oh my God, let's absolutely flock towards gold and let's start putting that. Now, I do want to take a moment to kind of trail back and look at fundamentally why has gold moved. And if you kind of look back, for the last over 50 years, there was only one buyer for gold, and it was your institutional investor. And these are the clients that played off, Fed real rates, looking at them and deciding, do I buy or sell? In 2022, you had a second category of client added, which was your central banks. Now, central banks started ramping up on gold, and that pushed it up. Last year, what we noticed was majority of portfolios that are held in U.S. assets. Now, I'm talking about a number that's $60 trillion. Majority of this was then decided to say, okay, out of this, let's say 45% of my portfolio is U.S. assets. I don't think the U.S. is going anywhere. I still think it's going to be the largest liquid market and the biggest capital creation market, but I'm okay to notch down from 45% to 43%. Now, if that 2% shifted into commodities, it would actually, mathematically, it could ramp up the gold price to about $6,000. This is just on a mathematical formula.
Right.
Now, a lot of this has been caught on by what you call your retail investors, which Gen Z forms a big part of. So a lot of these retail investors have access to this information, and they're looking at this and saying, oh, well, if I'm looking at that price follow through to about $6,000, then really I should get in. I should get in at the 1,700, at the 3,500. Even if it drops a bit, there's still a rally to go through. So a lot of this is kind of fed in by the fact that we have seen fundamental shifts in buying markets, and all that's happened is Gen Z, as you call it, just has access to that information. And they're catching on to this. Now, add to this your global uncertainty. You've got, a lot of geopolitical tension around. There's this big argument about de-dollarization or a move to fiat currencies and all of that stuff. I think all of this just creates this perfect storm for, let me start buying gold, because it's the headline news right now.
It's a really good point. It's interesting that you say that, and you're back at acceptance and access, because you have access. You can buy gold through your savings account now with your bank app very easily. And if you accept that that's the way to do it, okay, so I think you make a really good point. But it is apps like Baraka or Saba, or there are a million other ones, I guess, that are making it easier to invest. You don't need a broker. You don't need loads of money to put into that. So those kinds of things have really changed the investment landscape. The other side of it is they're pretty easy to use.
Yeah, they are. And that's exactly it. When you lower the entry barriers into anything, it all of a sudden becomes that much more appealing and attractive. You see, it kind of goes back to, again, in a previous world, if you wanted to make these decisions, you would have thought, I need to sit with a professional, I need to get the guided knowledge, which I still think you do, but I need to get the guided knowledge. They need to set me up with an account, and only then. So all of this could take quite a bit of a while, quite a bit of your time out of your daily routine. It could also probably mean higher barriers to entry. But with apps like Baraka and Sarwa, what have happened is you don't need a lot of money to go in. So it's a lower cost platform, but it's also a lower capital requirement platform. There are arguably certain measures to safeguard you from where you'd invest. So there's no leveraging or per se. So that does kind of create a little bit of a safety net. But I think what's most important is it just increases that follow through. I've thought about it, I've downloaded the app, next thing I know, I'm registering and I'm doing all of that. I don't have time to and about my decision anymore.
Yeah, well, that's exactly what I'm thinking, because when it comes to hitting the button, buy, sell, that's, I'm reticent, maybe I'm more reticent, maybe that's just an age thing, I'm not sure, but I can see where you're headed. Do you think that investing in apps, via apps like this, has any kind of risks that are unique to the online world?
Yes, I do. And I am very cognizant about talking to clients and children of clients about it all the time. Look, what you have to understand is when you download these apps, they're not geared to give you financial advice, right? A lot of them are built to give you AI modeling tools that will give you financial tips and give you stock indicators and all of that stuff. But what you have to be aware of is a lot of that is also driven by algo trading that drives off news. So if gold is, headline news, it is going to pop up on your indicator quite a bit.
For sure.
The fear you fall into is, are you buying headline news or are you buying something that fundamentally you have done the research, you've done that follow research through, you've done your due diligence, you understand about it. That's one. The second one for me is, there is sometimes this risk of I've bought in at a price and then all of a sudden, especially something like gold, it swings in super cycles, right? So
Yeah.
commodities always move in super cycles. So the price volatility is actually quite high. Now, if you've kind of if you've been caught in that position where you've picked it up and all of a sudden you've seen a swing really high, there is a little bit of this false confidence that builds up that says, oh, I'm a great picker and I can keep doing this. And then before you know it, it creates a certain amount of arrogance and ignorance. And that is a trap that is very, very scary for disciplined investing. And I always say this, the thief to disciplined investing is arrogance and ignorance.
It's a heady mix, isn't it? Yeah, okay. So there are lessons, I suppose, that the older generation can take from Gen Z. We could be a little bit more, I don't know, in the modern world, I suppose is one way of putting it. Yeah. But by the same token, what you're kind of advising there is caution more than anything, doing your research, understanding what you're doing, trying to keep a lid on, look at me, when you may not be all that. So, Gen Z can take lessons from Gen X as well. You're not invincible. You should diversify. You need to do your research.
Yeah, and your emergency funds. Are you caught up in a situation where if you have because that's the one thing I do find about Gen Z is they have this all-in attitude. It's let me go all in. And you kind of have to sit back and say, no, let me rein you back a little bit.
That's the invincibility of youth.
That's
I was bulletproof for years and then I wasn't.
Exactly.
Yeah.
And that's kind of where you turn around to them and say, look, no, you need to kind of, everything in moderation is perfect.
Right. Okay. How do you think financial institutions should be looking at this? I mean, what kind of response do you see that you like? And maybe what kind of response do you see that you're not so keen on?
I already like where financial institutions are headed, which is they've become a little more informational as opposed to you no longer now find a lot of experts that are trying to pitch a product, right? You generally find experts that are now involved in, let me educate you, whether you do this through me, whether you do it on your own. The idea over here is education, and I'm seeing a lot more of that. And I think that is a response to financial institutions also now catching on to the fact that you now have a savvy investor. You now have somebody that has come armed with the knowledge and is sitting in front of you and isn't no longer just here to hear from you, but have their own opinions and want you to consider that in their financial modeling. So I think we are seeing that. We're also seeing a lot of financial institutions have jumped onto social media. You start seeing a lot of them on Instagram, TikTok, LinkedIn. So I think all of these things, they are definitely changing. I still think there is room to do a lot more. But I would like to see a little bit more integration of, maybe internships at the school level as opposed to just because a lot of kids right now aren't even opting the university route, Tim. A lot of kids right now are actually, right after school, they've decided, no, this is a career I like. So I would like to see financial institutions kind of integrate a little bit more at the school level and start to say, okay, well, come in for an internship and do a little bit of a spring insight or a summer insight term with us.
Okay, and I guess as well, maybe building, financial education into curriculums.
That would be brilliant.
Which would be a great thing because it's going to be a major part of your life, whether you like it or not. Money ain't going anywhere right now. I suppose simplification is a good thing. Inviting people in is a good thing, but oversimplification breeds a false sense of security potentially. So again, it's you've got the acceptance, you've got the access, but think about the research. Final thing, we've got I have to give you 30 seconds for this, but for somebody starting out, somebody thinking, look, I want to get into, online investing, I want to look after myself, I want to do this, what's the smart strategy?
Do your research. Always do your research. And it's like I said before as well, don't buy headlines, but buy fundamentally good businesses. Now, if you think the environment is right for commodities like gold, silver, understand what are you buying. Because I see a lot of people buying gold, but not a lot of people understand that gold is not it doesn't earn money. Gold as a commodity just kind of sits there as a store of value. So do your research on all of these aspects and then build a portfolio for yourself.
Okay, and what should you avoid, very briefly?
I would avoid anything that's headline or hype. At the moment, for me, that would probably be don't buy into the crypto dip trap right now.
Okay, good advice, Pyle. I appreciate that. Partner, senior investment strategist for the Michelle Carby practice. I'll get your room ready so when we get you in 2 days' time,
Perfect.
you can just stay. But nice to see you. Thanks for coming.
Thank you, Tim.
This is Mira Business FM. News is
Mira Business FM. The sound of success.
Good morning, it's 10:30 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the top headlines. Dubai has announced 2 innovative projects to reduce traffic and improve connectivity across the city. The Dubai Loop will use tunnels to carry vehicles through high traffic areas, while the Glideways network will feature self-driving pods linking metro stations with nearby neighborhoods. These initiatives continue the Roads and Transportation Authority's efforts to ease congestion, having completed 67 rapid traffic improvements across the Emirates last year, Khaleej Times reported today. Also, Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al-Tayer says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year. A report from the Gulf News said. The RTA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. Gold and silver prices rebounded on Tuesday after suffering a historic sell-off, pulling global stocks and funds linked to the metals higher. All-time high, and spot gold was last up above 5.6% to $4,930 per ounce. Gold futures gained over 6%, hovering at around $4,949. Spot silver rose over 6% to trade at around $84.29 per ounce, and silver futures were also nearly 10% up at $84. The moves marked a slight recovery from a decline on Monday that came after a half of nearly 10% for gold on Friday and a 30% collapse in silver prices that marked the metal's worst one-day performance since 1980. Mining stocks and exchange-traded funds listed across the globe also notched gains as the metals continued to rise on Tuesday. That's according to CNBC reporting via MSN, and Bitcoin today is trading at $76,398, and for those tracking remittances, 1 dirham equals about 24.61 Indian rupees, 75.90 Pakistani rupees, 33.24 Bangladeshi taka, 16.05 Philippine peso, 12.79 Egyptian pound. Meanwhile, 1 British pound is equal to 5.03 dirhams today. That's the news for now. I'm back with the headlines at 9. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
Mira Business FM, the morning drive. Here in the UAE, petrol prices are forecast to edge higher next month. It follows I guess a brief dip earlier this year towards the end of last year. Joining us in the studio, as I mentioned just now, global oil and gas expert, strategic advisor at Ernst & Young Parthenon, Karan Gupta, to help us break down what's driving the market and what we can all expect, really. Karan, great to have you in the studio.
Pleasure to be here, Tim. Thank you.
We've talked over Zoom before, but it's always nice to kind of be eye to eye, of course. Look, let's start. What are the main reasons, if I can keep this relatively low level for the reasons of my grey matter, the main reasons the petrol prices in the UAE are expected to rise in February?
Well, thank you, Tim. Thank you for having me. So the simple reason really is that there's more cars on the road, right?
Yeah.
Statistics from SALIC and RTA show that there was a 9% increase in new registrations last year. Mm-hmm. So there is, more cars on the road, and as we all know from the traffic this morning when you drove in, there's the population is only going to increase. But specifically in the short term and in the last couple of months, there's been a lot of geopolitical activity in the region.
Sure.
First of all, in Venezuela, where there was some events. Venezuela used to produce 880,000 barrels in December, and that fell to about 350,000 in Jan. So that's affecting the oil price. And then in Iran, we see naval forces from a foreign country moving into regional waters.
Geopolitical tensions,
Yes.
as people term it, yeah, for sure.
So real geopolitical tensions, and then half of the world's exported oil on a daily basis goes through the Strait of Hormuz,
Yeah.
which has had issues in the past. So there's a risk premium in the oil price, and that's being factored in to what we're paying at the pump.
Okay, and of course that has a major influence on what we pay at the pumps here, because every month, prices are reevaluated.
Absolutely. Absolutely. Gas prices move highly in correlation with oil prices, and albeit there's a little bit of a lag. So oil prices, for example, increased $8 a barrel in January compared to December, and so there is a chance that gets reflected in fuel prices. There are other reasons why the gas prices might move, factors such as refining margins and seasonal demand. But largely correlated with oil prices.
I mean, at the moment, for most people, we're reading of events in Venezuela, and we'll talk maybe a little bit more about Venezuela if we have time slightly later on. But we're reading about that. We're reading about, global geopolitical tension. Can you just go into a little bit more detail about how things like this, events like naval build-ups or President Trump's introduction into Venezuela, let's put it that way, the role that they play in pushing fuel prices higher?
Sure. So, as I said, fuel prices are, what we pay at the gas here in the UAE is dependent on oil prices. But when it comes to setting the fuel price in the UAE, that's done on a monthly basis by this committee, right? And they don't use just the price of Brent crude. They look at international benchmarks.
Yes.
And that's why something that happens halfway across the world may affect what we pay at the pump here. So when it comes to Venezuela, what happens is there's now a risk factor that's priced into the price of oil. And that affects international benchmarks because that affects trade. Because no one country, is able to produce and survive on their own. There's imports and exports. So the world is so interconnected. And that's why you see when benchmark prices rise, whether that's oil or diesel, you see an effect in the decision making when it comes to setting the fuel price in the UAE.
Okay, and most people talk about Brent crude as being a benchmark, WTI West Texas Intermediary, as those are the two, I guess, big global benchmarks, aren't they, when it comes to determining an oil price average, really.
Those are definitely the global benchmark when it comes to looking at oil prices. Those are what you and I know of. The Fuel Pricing Committee actually uses the S&P Platts oil index out of Singapore, and then for diesel they use another S&P index out of Northwestern Europe, and that kind of reflects the amount of diesel or natural gas being used for heating homes, for example.
Okay. What impact does OPEC and production decisions have on fuel prices in the UAE?
So OPEC today produces more than 40% of OPEC countries produce more than 40% of all the oil, right? Previously, that was higher. That was above 50%. So while their say is reducing as the U.S. expands production, as they have been over the last couple of years, they are still extremely influential. And that's why you see the UAE, Saudi, and key OPEC members making decisions such as production cuts or production freezes, because they're trying to temper or counteract the supply situation in the market.
This is interesting. I don't spend a lot of time talking about oil with people, and it's kind of, there's a juxtaposition there. I think you live in a country where the economy is so, or has been historically so impacted by the oil price, and it's so relevant for all of us here. And I think a lot of us don't. It's almost like we don't take it for granted, but we don't pay as much attention because it's omnipresent. Does that make sense?
Yes, absolutely.
Yeah, that's kind of so. It's fascinating to talk to you, even though we're talking at a relatively simple level, which of course is good. Global oil supply to me it appears relatively stable. The market is well supplied, perhaps oversupplied. Some would argue, I think. So if that's the case, why are prices under such pressure?
Yeah, you're absolutely right. There is in fact an oversupply in the market, according to the International Energy Agency. That tracks these things, there is supposed to be a surplus of 4 million barrels per day throughout the year. So there is an oversupply, and that supply is driven primarily by the Americas and the production coming out of there. But that's tempered by sort of production freezes coming out of OPEC countries such as the UAE. So OPEC members are showing remarkable constraint for the greater good. But the sort of the pricing pressure that you're seeing at what you're paying at the pumps is again based on geopolitical activity. And in fact, I would say that you would see a much higher spike, but that's being tempered by the oversupply. So there's this sort of push and pull or give or take when it comes to pricing.
It's a really fine balancing act, isn't it? So let's look close to home and look at if you can kind of outline how the UAE's monthly fuel pricing system works for petrol and for diesel.
Sure. So interestingly enough, before 2015, UAE fuel price was subsidized. So we'd pay a lot less than the rest of the world.
Yeah.
But since 2015, when the government has now modernized and moved with the market, which is actually good for everyone, the UAE prices are set on a monthly basis. So there's a fuel pricing committee, which is made up of members from the Ministry of Energy, the Ministry of Finance, representatives from ADNOC, ENOC, all of these companies. And instead of just using the Brent crude price that you and I know about and talk about a lot, they use this international S&P Platts index, which reflect traded prices in Singapore as well as for diesel, the index coming out of Northwestern Europe. And they look at that as a primary factor, but then they also look at things such as refining margins. And because, for example, let's say there's an issue with a refinery and not as much crude is getting refined to be in a state where you can fill up your car, that might have an effect on supply of fuel that month. So they look at things like that as well before they make a final decision on what next month's pricing will be.
Okay, and that could be something as simple as, I don't know, a particular refining plant could have a breakdown or an issue, really as simple as that. Yes. Could it be that refining costs or seasonal demand are affecting prices this month, do you think?
This month is hard to say. I mean, it depends on, how much natural gas is being used to heat homes in Canada or the UK. So how bad the winter was.
I mean, it's been. I mean, I anecdotally, I know. I've got family in the UK. It's cold, so
Yeah.
they're using
Yeah,
using
absolutely.
heating
So
more.
it can be a driver because
Yeah.
that would affect the index, the international index that we talked about.
Mm-hmm.
So those are definitely factors. I would say in the UAE maybe we're a little bit insulated and we're not feeling that as much. But global demand cycles, how much heating oil is needed, definitely play a part. But I think in this part of the world, apart from the geopolitical factors we talked about earlier, I think refining costs probably matter more.
Let's look at this and on a slightly more consumer level. What does a small increase in petrol prices mean for households, but also, and I think this is probably a more interesting thing, for businesses as well? Let's look at the impact.
Sure. I mean, I would say, do you drive an electric car or a gas-powered car? That would make a difference.
I'm good old internal combustion engine, unfortunately. I
Yeah,
suppose.
absolutely. So if you drive an ICE vehicle, you're gonna feel a little bit of a pinch. As a consumer, I fill up about once a week. I think that's average in the UAE, and it costs me about 150 dirhams. So let's say prices were to go up 6% next month at the most. That translates to 9 dirhams every time I fill up. So 40 to 50 dirhams a month on a household, significant, I think. But what's more significant, like you said, are businesses, right? Because businesses, especially those that rely on transport a lot, logistics businesses, your food delivery companies that we all love in the UAE, those will definitely feel more of a pinch because this goes directly to their operating costs.
Yeah, it does. And it is as simple as, isn't it? If we see an increase of 5%, potentially there's a little bit going to be on top of your coffee that you buy in the supermarket, the tomatoes that you buy. It translates as simply as that. It's something that we don't really think about, but it's expensive, the weekly shop these days.
Yeah, absolutely. It all translates back to the consumer at the end of the day.
Yeah.
So yeah, we'll feel it. We'll feel a little bit.
And the other way of looking at it as well, as a consumer, I suppose, is as you point out there, if you pay 9 dirhams a week more, you're paying, 40 or 50 dirhams a month over the course of a year. That's a pretty nice meal out for the family, isn't it? That
Absolutely.
You've spent on petrol. Okay. That gives us good perspective. Should we expect more increases in the coming months, do you think?
I think in the near term with
That's the how long is a piece of string question.
Yeah,
Pretty difficult to answer.
I wish I had a crystal ball, but I think with the current tensions that we see in the region and around the world, I think there's definitely a near to midterm effect where we'll see higher prices, but hopefully that eases out over the course of the year. We'll just have to see.
Yeah, it's very hard to say, isn't it? Yeah. I wanted to get your thoughts on something, just very briefly. The news stories over the last day or two, news that Saudi Arabia is lowering prices again for crude oil exports to Asia. And this is the light grade, Arab light grade crude, as it's called. So Asia's demand for Saudi crude rising. That's my first question, yes or no. Indian refiners perhaps replacing Russian oil with Middle Eastern supply. Does that point towards lower global oil prices when you see these kinds of actions?
So I'll start with your last.
There.
Yeah, I'll start with your last question first. So when it comes to pricing, that's largely dependent on supply and demand, right? Yeah. And we've talked about a couple of factors. There is an oversupply, so I think OPEC showing restraint is probably keeping prices in check at the moment. Mm-hmm. When it comes to Saudi lowering prices or Saudi sending more crude to Asia, they're probably feeding into the refineries, right? So the refineries in India can take that oil, and then India has shown in recent months and years that they're going to go to the lowest supplier of oil, lowest price supplier of oil, right? They started buying oil from Russia when they could, and they are a energy-hungry country with the population and the energy demand. And they do produce oil, a significant amount of oil, but they can't keep up with the demand even internally, both consumer demand as well as demand from refineries. So I think it only makes sense that they're coming for light sweet crude from Saudi.
Okay. Final question, I suppose, and I guess in lots of ways, why did the US do what it did in Venezuela? Is it simply an oil play? I mean, there's clearly a great deal more at stake here, but you're here, so I need to ask the question.
Oh, that's putting me on the spot here.
It's a big one.
Look, I think what I can tell you is that the Gulf Coast refineries, that there's several refineries on the Gulf Coast in the US and there's some up in the Northeast, but they're set up to process crude oil, which typically comes from places such as Venezuela and Canada, oil sands in Canada. And now with easier access to some of that oil coming out of Venezuela, that'll feed the refineries and keep them busy. So it makes a lot of business sense.
Karan Gupta is a global oil and gas expert, making it easy for us this morning, and I appreciate that. You're also a strategic advisor at Ernst & Young Parthenon, and it's been good to talk to you. Thank you for coming in.
Thank you, Tim.
Really appreciate it. Mira Business FM, it's the morning drive. Get in touch with the show. Tell us what you think. Social media, a like, a subscribe is always appreciated. And remember, everything that we do, all the content we produce is available to listen and or watch again on our website, YouTube, wherever you get your podcasts from. Just look for Mira Business FM.
Mira Business FM, Dubai's home of business radio.
It's time to turn our attention to a topic that is, I figure is going to get more and more attention and really rather quickly. Crypto, transforming the way we invest, we trade, we store value. What happens to your digital assets when you're no longer here is a question. Unlike property, bank accounts, or even gold, crypto doesn't automatically transfer through traditional inheritance systems, something that lots of investors maybe don't consider until it's too late. Now, here in the Emirates, industry estimates suggest millions of dirhams worth of virtual assets are effectively locked away, perhaps forever, after owners pass away. Not because of fraud or hacking, but because heirs simply don't have the keys. Joining us, Amir Tabsh is the CEO of Officer, which is a Dubai-based virtual asset service provider and crypto exchange, who's been working on solutions to make digital assets inheritable, just like property or values. Amir, it's good to have you on the program.
Thank you, Tim, for having me.
Appreciate you coming on. So let's start right at the beginning. When a crypto owner passes on, who actually inherits the assets, Amir?
Crypto is treated like an asset in the person's estate. So inheritance is determined by the applicable law, the will, if available, and the court process. Now, practically, control depends on access. So if the crypto is self-custody, which means it's in a personal wallet, the private key or recovery phrase is the key to the vault. So if no one can access it, the assets can become effectively unreachable, even if the family is inherently entitled.
So the practical issue is really where the crux of this matter is. How big of an issue is this in the UAE at this point in time? Are we really seeing large amounts of crypto locked away because the keys are unavailable and the heirs don't have access?
We're seeing a lot of crypto flow come to the UAE because of the regulatory regime. We don't have a really reliable number on UAE because lost access is really hard to measure and usually isn't reported. But globally, analysts estimate roughly 10 to 20% of Bitcoin may be lost or permanently accessible due to missing keys. But of course, these estimates kind of vary by method. They're based on blockchain data, etc. Now, in the UAE, the strongest indicator that this is a real issue is the formal solutions that have started to appear. So we have the IFC courts. They launched Digital Asset Will Service in October 2024, right? Explicitly aimed at digital assets, and succession planning. Now, this is kind of the strongest signal for us that inheritance friction for digital assets is no longer theoretical. It's real, and it's a present problem.
Why is it that crypto is so different, if different is the right word, but it's almost aside from bank accounts or property when it comes to inheritance?
Well, banks and property registries have an institution in the middle. Crypto often does not. So with a bank account, the bank can actually freeze funds, they can verify heirs, they can transfer based on court documents. With property, registries can update ownership through legal process. With self-custodied crypto, the blockchain recognizes control through cryptographic access, the private key. Now, a court can decide who is entitled, but it cannot reset a password, for instance, on a blockchain wallet. And this is kind of the main difference here.
If someone has a will, essentially, it doesn't mean that automatically their family can access their crypto. Am I right in saying that's the general kind of statement you could make?
Not automatically. So a will helps establish who should receive the assets. It does not itself provide technical access. So if the crypto is held with a regulated exchange or a custodian, the family can often claim it through that provider's process, usually with probate documentation, identity checks. But the exact steps, of course, vary by provider. Now, if the crypto is self-custodied, the will must be paired with a secure access plan. Otherwise, the heirs may be legally entitled, but still unable to access the wallet.
Got you. Okay. I'm trying to build up a picture of just how this works from a legal perspective, if indeed I could do that. What usually goes wrong? Is it the technical access, like private keys? Is it the legal barrier? Is it the fact that, this is still an area that perhaps, simply put, we don't understand as well as we might?
Well, it's usually both, and they kind of stack. So common failures include missing private keys, seed phrases, wallet pins, lost phones used for two-factor authentication, or simply no one knows where the wallets are or on which platforms they are. So even when the legal entitlement is clear, the access problem can still stop everything. This is why technological innovation and mechanisms matter here. They don't replace inheritance law, but they can reduce the chance that assets become unreachable due to missing keys or unknown access path.
I was going to say to you, Amir, it seems as though if you don't have the key, if you have, as you put it there, and I hadn't really thought of it in these terms, as simple terms, that you don't have the phone's in a drawer somewhere, gathering dust, not charged, and the two-factor authentication is available on that phone. In theory, these are assets that are lost in perpetuity, potentially, aren't they?
Yes. So we've seen instances. If you remember a few years back, the gentleman that threw his USB and never, and years later he had Bitcoin in them, and they kind of accumulated in price, and he spent millions trying to get them back. And yeah. So theoretically, yes.
Okay, theoretically, yes, but how could you? Is there? I mean, I don't even know where to start with this. To be honest with you, is there at some point down the road the potential that these wallets could be unlocked in some way? Because I can't see a way that you could do that. So there could be fortunes sat that are just inaccessible.
Yeah, well, it's a combination really. So it's a two solution. So one, the legal system has to catch up when it comes to digital assets and inheritance, right? So especially, so we've seen this in the UAE in particular, in the free zone legal framework, we've seen purpose-built steps. So the IFC court with the digital asset wallet service, they've enhanced the digital asset law, and more broadly, the UAE's virtual asset regulatory environment has matured. It helps create kind of clearer processes when assets are held with regulated providers. But the solutions that make crypto inheritable are in different layers. So layer one is what we discussed, the legal layer, which is a will or a succession framework that states who gets what and who's responsible for executing it. Now there's another layer, which is the access layer, because courts can't unlock private keys. So if assets are self-custodied, you need a secure, well-designed way for the right people to gain access. And third, there's the custody and workflow layer. So using regulated custodians or regulated exchanges for some holdings can help because they can follow documented procedures when presented with the right.
Good morning, it's 11 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. The top stories here say the UAE Ministry of Finance has strengthened international partnerships and discussed the future of fiscal policies at the World Government Summit in Dubai, which runs from February 3rd to the 5th. Minister of State for Financial Affairs Mohammed bin Hadi Al Husseini said the UAE is committed to shaping global dialogue on economic policymaking and building more resilient, sustainable economies in the face of economic, technological, and geopolitical challenges, according to the Emirates news agency WAM. Sessions at the summit focused on fiscal sustainability, digital transformation, and the responsible use of artificial intelligence in public financial management to enhance transparency, efficiency, and stability. The ministry also co-hosted a GCC session on economic transformation and fiscal and monetary integration, signing the Memorandum of Understanding with Kuwait to strengthen bilateral relations and promote financial cooperation with Bermuda to expand cooperation in fiscal policy, budgeting, taxation, and public financial management. Moving on, Dubai has announced 2 innovative projects to reduce traffic and improve connectivity across the city. The Dubai Loop will use tunnels to carry vehicles through high traffic areas, while the Glideways network will feature self-driving pods linking metro stations with nearby neighborhoods. These initiatives continue the Roads and Transport Authority's efforts to ease congestion, having completed 67 rapid traffic improvements across the Emirates last year, Khaleej Times reported today. Also, Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al Tayer says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, a report from Gulf News said. The RTA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. The Trump administration is set to unveil its biggest plan yet to secure critical minerals for everything from jet engines to smartphones. The strategy includes international purchase agreements and a $12 billion strategic reserve to counter China's dominance. Vice President J.D. Vance will deliver a keynote at a meeting hosted by Secretary of State Marco Rubio with officials from dozens of countries where supply chain deals are expected, as per an article on the Yahoo Finance. That's the news for now. I'm back with the headlines at 11:30. For more news, stay tuned and follow us on X, WhatsApp, Telegram, and on mirabusiness.fm.
You're listening to Mira Business FM.
It's the Morning Drive. I'm Tim Elliott. Thank you, Inzi. He's back in just under half an hour's time. And it's pets next on the Morning Drive here at Mira. And Joey Chaya is with me. He's a Lebanese entrepreneur. He's born and raised in Dubai, turned his lifelong love for animals into a homegrown startup that's now changing the way pet care works across the UAE. It says here he is the founder of Pet Bay. Isn't that exactly what you do?
That is absolutely correct. Thank you so much.
Joey, look, it's lovely to meet you. Thank you for coming in. This is, and I'm going to quote you here, the region's first home-based pet care platform designed to make care more personal, stress-free and accessible, especially for pet parents. That is actually a thing, isn't it, these days as well, who don't want to rely on traditional kennels or catteries. So let's start with you before we get to what you're doing. You've always been an animal lover, I guess. You have that face, Joey.
Yeah, that's right. I mean, I always grew up around animals, family pets. I've had a couple of dogs and a few cats growing up, and it's just been quite amazing to just be surrounded by them. You know, they bring a lot of life, a lot of joy into your day-to-day. You know, I think something to look forward to as well when you come back home from, let's just say, school, if you're a kid, and if you're even as an adult, it could be a very important stress reliever to even get that love from a different point of view. You know, man's best friend, for example. Brings a lot to the table, and that's basically where the passion came from.
I was going to say that actually because it comes from young. I grew up. My mother was I think the original crazy cat lady. So there are pictures of me on the bed in my literally just born with the cat wandering around me. So I'm very used to it. So I get where you're coming from. Talk me through the idea for Pet Bay.
Yeah, absolutely. So basically, Pet Bay was started because of my own experience with my dog. His name is Renzo. Back in the day, and he suffered from anxiety. And so ultimately, I had to go with the options that were available then, which was facilities, various different facilities. And I just saw him sort of change his personality a little bit in the beginning, which, wasn't really a good thing. Ultimately,
it's upsetting, isn't it?
It's upsetting.
For him and for you.
Absolutely. I couldn't agree more. And, it was a borderline depression, right? So, why would you want to put your pet through that? So the second time I tried this, I just spoke to my neighbor. I asked him, like, hey, can you look after my dog for a little bit, and I'll pay you whatever amount. And he accepted a price that was a fraction of the cost that I was paying. So it really just made sense, and he remained in a home environment, which was the key business basically offering that we're doing today.
Yeah, so Renzo, your dog, doesn't go through the stress of leaving. And I think we need to make a point here as well, that for people who aren't pet owners, to explain the whole kind of process and the feeling of it, if you see somebody you love or something you love or an animal you love going through a tough time, that really affects you, and that's really at the heart of this. And if you can be at home in a familiar environment, the stress levels are far lower.
Yeah, absolutely. I mean, look, in general, there's a big group of pets that actually require our services, right? Or at least acquire our style of home-based pet sitting.
Right.
For example, older pets that lack mobility. All pets will eventually, become a little older and will lack a little bit mobility.
And need some more looking after.
Yeah, need some more attention. Cats are very territorial creatures. They prefer to be in their home environment. There are other things, pets with disabilities or, pets that suffer from anxiety prefer to stay in a home environment, something that they're used to, that they're more familiar with. So that we just wanted to bridge that. But obviously now we've opened it up to all pet parents because when we did a bit of the market research, we realized that they would prefer a home-based option because that's what they're used to. Ultimately.
Okay. So you're a tech platform, aren't you? And you basically connect people who are looking for somebody to look after their pets in a home, in their home, with people who will help them out. That's kind of what you do.
That's exactly it. And so we vet. There are two sides to this. There are two sets of users, you can say. One set of users are the pet sitter, and the other one is the pet owner. Pet sitters apply, and we vet them through a very rigorous 5-step process. But once they're approved, their profiles will be listed along with their prices, pictures of themselves, images of their home, with a lot of information where, on the other side, where pet parents can visit these profiles and make a proper decision based on certain criteria. And what's cool about Pet Bay is that you get a lot of choice in the matter. You get to speak to them, you get to meet them prior to actually making any kind of engagement, or booking. So yeah, and we understand that because, ultimately, there is a fine line between tech and what you need to do at a manual point. What I mean is that when you're ordering an Uber, you don't really speak to anybody, right? However, in our case, ultimately, it's important that we facilitate a meet and greet. So it's always going to be tech and a little bit of love, let's just say, from our side.
I like that. Tech and a little bit of love. That's what we all need in our lives. And we live in the tech age.
Absolutely.
Talk me through the process, how you called it a rigorous process, a 5-step process. But I mean, that's important for a number of reasons. To make sure you get the right person, to make sure that the people that own the pet, I'm not sure if owning a pet's the right way, the pet parent, they're happy, but also to be sure that the pet is happy with the person who might potentially be helping them out, looking after them.
100%. That's why the meet and greet functionality is super important, and we have integrated a meet and greet functionality within our chat system. So basically, if a pet owner wants to request a meet and greet, it's literally a button that they need to press, and then it would trigger a push notification to the pet sitter, who would then accept or essentially reject the meet and greet. And then our system would literally offer them other options at that point in time. If there was a rejection and if there was an acceptance, then they meet, and our app can track that and then sort of trigger a booking link, for example.
Okay, and how do you, I mean, there is some vetting, that's probably the wrong verb to use, but we'll use it, of, potential pet sitters, but also potential pet parents. And I guess you have to vet the pets as well, because, if you're not used to looking after a Great Dane, you're used to hamsters, you need to be aware of that.
No, so the vetting process from our side, like I said, is rigorous, and vetting is the right word, for sure. So Emirates ID is required. They have to go through an application where they'll have to, again, add images, emergency contacts, references, go through an experience quiz, which they have to score high on. And sort of that's the vetting done for the pet sitter. Now, for the other side, there isn't much being done from our side. However, what we do is we tell the pet sitter to vet themselves. So that's why, like I said, dialogue and meet and greets are super important prior to engagement or actually confirming the booking. We make sure that we facilitate that, and almost 95% of all bookings actually go through a meet and greet or at least a phone call first.
Well, I mean, I guess if you apply to be a sitter for something like this, and I'm speculating here, but if you're the kind of person that does that, you're the kind of person that wants specifically to work with animals. That's a type, isn't it? And I guess that's the type that you are looking for.
Absolutely. There's that's definitely the type, and there are attributes like working from home, very important for us, I think, because in the end, like, it's not ideal to leave a pet unattended for more than 5 hours in our policy. So we do feel that it's important to just look at the full picture.
I mean, dogs need to be walked, cats need stimulation, they need play and chase and all that kind of thing. Okay, I get you. How do you make money out of this? How are the financial arrangements? How does it work?
So basically, pet sitters get to set their own rates. Right, we do have a minimum and a maximum, so we set the minimum and maximum. 50 is the minimum, for example, and 150 would be the maximum.
Right.
Pet sitters can choose their prices in between, and we actually make a 20% commission from every transaction that comes across our platform, and the commission usually is shared between the pet owner and the pet sitter.
Okay, well, I appreciate you being transparent about that. But I guess as well, if you do well at this, there's a rating system, there's a recommendation system, kind of a rate the driver, Uber type. Is that how it works?
Absolutely. We like to say that Pet Bay is like Airbnb for pets. It's in 3 words, right? This is how, and yes, absolutely. So vetting, again, just going back to that, not only do we vet, but ultimately the pet owners are vetting other pet sitters by reviewing them. So that pet owners, once they actually reach the pet sitter's profile, they'd be able to actually get that information from other pet owners.
Okay.
Feedback.
I'd like to touch on technology a little bit because you're a tech firm,
Absolutely.
really, aren't you? It's the age that we're in as well. Pet ownership is, I don't know, it is pet parenting really now. I've got to get the phraseology right. But we've got lots of tech for pets now, automatic feeding, automatic watering, you've got self-cleaning litter trays, all that kind of stuff. So in theory, anybody listening thinking, and they're not a pet person, they're thinking, well, you could kind of leave your pets head off the weekend or a week, wouldn't really be a big deal. We've got the tech that can handle that. I'm not advocating that, but I can understand that kind of thinking. But it strikes me that this kind of very personalized service is a business for humans as much as it is for animals.
Correct, yeah.
So when you set up, you've kind of got a nice happy medium there, haven't you?
Yeah, absolutely. I think that a lot of the time, or I could say prior to Pet Bay, people had to struggle, go through community chats, maybe Facebook groups, and send out a Hail Mary and try to hopefully get something in return, and they still have to interview the person. What's interesting here is that we're actually doing all of that via tech prior to the pet owner even speaking to anybody, so that we know for sure there's going to be good dialogue. And look, the world of tech, automatic feeders are there. They're a good thing. They do help sometimes, but it's just not enough. In the end of the day, you're going to need, that human element, as you put it, whether it came from a pet sitter or the pet owner themselves, and cuddling and applying that care. In the end of the day, a lot of people consider them as their own kids, right? So when we combine that, when I was saying in the beginning, combining tech with love is literally what we are doing. So when I say tech, I mean, the process in how, let's say, a pet owner wants to book the same pet sitter next time, they'll only have to press one button because they've already met them, they've already had a booking with them in the past. So how do we make that easier, right? They're rushing on a work trip and they just need to make a quick booking. They just book again, so they'll open the app, book again, and that's it. It's super, super smooth from that point of view. And that's literally what we're doing every day, looking at how we optimize.
And I guess you've got people coming to you, members or people who engage with your system who are doing this. You could make yourself a reasonable living at this if you, took this on
absolutely.
With a professional mindset. Is that happening? You starting to see that?
Yeah, absolutely. So part-time work has been, is allowed now here in the UAE. I can't remember the date of when it was actually where it started, but
it's recent. Yeah,
it's quite recent. And I mean, although we say it is a part-time mechanism, people are making enough money to cover their expenses, and a lot more in some cases. What you can do, or what we can know for sure, is that if a pet sitter has a large space, for example, and is able to accept multiple pets, right, that are social with each other, then they can definitely make a really good income.
And some people, I suppose, have different exotic pets, not your standard cat, dog, hamster, rabbit, whatever it might be. You're going to have people that want you to look after their terrapins, I don't know, their tarantula collection. Are you seeing that? Is there anything slightly more exotic, I think is what I'm asking?
Yeah, I mean, I'll be open. I mean, so we only cater to cats and dogs at the moment. However, we don't say no to any animal that, or any pet parent that wants.
Well, you're going to get inquiries, aren't you?
Absolutely, yeah. And we are opening it up to all the other categories. But yeah, we've received, birds, hamsters, rabbits, carnivorous birds, actually, one time where it's required some live feeding even, the pet sitter had to be briefed, but we eventually had to allocate a pet sitter that had enough experience to be able to do that. So it was, we don't, again, like, it's the world of animals, and being able to facilitate that no matter what animal it is, yes, absolutely. Yeah.
I love it.
If someone came up to us with a lion or a tiger, I know that they don't exist here really in abundance, but if it ever happened, then we would also try our best to facilitate that.
Wow. Okay. Let me ask you a little bit about your business and the setup, really, because turning what you love into a business is something lots of people would like to do. Not that many people get the opportunity to do it or take the step, I suppose. Does doing what you like, or the things that you love, does that make it easier, or is there an emotional pull there? How do you handle it?
I think passion is what gets you started, and then purpose is really what
Because reality
keeps
hits
you
then,
going.
doesn't it?
Yeah.
You've got to. You're responsible for this.
Yeah, absolutely. No, I think look, the passion. It's not easy. I can tell you that for sure. Especially the transition from being an employee to being an employer. At that point, your responsibilities are much larger. The well-being of other people are in your hands. Essentially. So, being a business owner and an entrepreneur, you get to look at two sides of things. You have to run a successful business, but also make sure that you manage the team properly and make sure that they're happy.
How many people in your team, by the way?
At the moment, we have 7 going on 9 in about a month.
Okay.
Yeah, a small team. So we're still a startup,
But there
moving lean.
There are difficulties in small teams. I always think small teams are. It's critical that you get the right people, particularly in a small team, because one wrong person can really upset things.
Couldn't agree with you more there. Like in terms of difficulty, I guess there's two sides to it. So one is actually adopting the idea of starting a business and actually doing it. And really, the simplest answer here is just get it started. Like just start somewhere. It doesn't matter where you start. Just start. It's gonna be not optimized in the beginning, but you have that time to do that. Right. And then the second part is actually running the business itself. The challenges that come every day, but what we say is bring the problems, right? We need something to do. So that's really the sort of idea behind not only being an entrepreneur, just any business owner. If you're going to take the leap of faith, you might as well be ready and sort of embrace the problems that come your way.
I think for a lot of people that's an interesting point, but for a lot of people that's difficult, because if you have the mindset or the mentality or the attitude, whatever it is, that you have this kind of, well, I don't see problems, I see opportunities. If you can truly mean that, then you're probably doing the right thing.
Sure. And, we always take feedback very, very seriously. Any feedback from pet owners, the app should do this. Why can't I, message the same pet sitter that I did last time? When we received that feedback, we immediately spoke to the developers. We're like, okay, let's get that in our backlog and in our product roadmap and implement it ASAP. So it's ever changing. We take the feedback very seriously. It's although difficult, things get easier as you go and you get used to it, and then you just start to be the best at what you do. So
it's amazing what you can cope with. It's amazing what you can handle, isn't it?
Absolutely.
Let's talk about how you license it, because you start the business and you get your license, and then you're running the business. But the bureaucracy is whatever anybody thinks. Bureaucracy is something you have to be able to handle, have to face.
Yeah.
How did you go about licensing this? This is a tech startup, really?
Correct. Yes.
Okay.
So we have a tech innovation license from Abu Dhabi Global Markets, and basically they had a very good deal on tech startup licenses to be able to do exactly what we're doing. At the time, they somewhat subsidized it to attract more entrepreneurs to do I guess what I'm doing. And so I'm licensed from there. It's a tech innovation license, meaning that I'm kind of acting as a broker or a middleman between two parties. So PetBay is a C2C platform connecting pet owners and pet sitters, which are two, individuals that need to meet and then transact on the platform for us to make money. We're licensed from ADGM. If you're looking at sort of other licenses, though, like grooming licenses, veterinary licenses, very, very different, because there you'd be actually handling the pet. Driving the pet from point A to point B if it's a pet taxi. In our case, we are just sort of facilitators, you can say, middlemen that would really improve on the process of actually making that connection.
What were they like when you said, look, this is my idea, here's my pitch? How was that received by ADGM?
I think the process in terms of actually onboarding with ADGM was very well received. I think that the UAE is really going into that general direction, right? So it was super well received. It was, to my surprise, I thought it might be a little bit, yes, sure, I had to explain everything, but as soon as I did and explained the business model, they were super accepting of that, and we got approved.
Well, I asked that for a reason. Just because, I'm guessing that, tech startups, it's fintech, and it's, we want to do this in crypto. We want to, we've got this great solution for whatever company, and
Yeah.
you're there going, well, look, what I want to do, I want to put this person to look after this dog here. I mean, it's something out of the ordinary.
It really is. It really is. It genuinely was an experience of mine. Like I lived it. So when you see something like that, and you actually see your pet. Let's say I came back from vacation, went to collect my pet from my neighbor's house.
Yeah.
The difference in emotion, sort of the difference in vibes that my dog sort of was giving me, versus when I saw him come out of a facility per se, a brick and mortar. Not saying that they're all like not doing things correctly. A lot of them are. It's just that we're providing the choice here, right, for the pet owners. Like you can choose whether or not you would like to do that.
Well, it's not a one-size-fits-all thing, is
exactly,
it? You know,
yeah.
it's and it's also a very emotive situation, I guess. So you might love it, but you're building something from scratch. There are obviously challenges. You've probably had some sleepless nights, I suppose. You're thinking about money. You're trying to pay your staff. You're trying to make sure the tech is running. You know, you're updating everything. How have you found it so far? How do you feel about the where you are?
I feel amazing. It's overwhelming, but very rewarding. You know, people call me sometimes saying that, like, crying they've not been able to travel until they found us. So, you know, to see sort of that testimonial is amazing. It kind of keeps you going. But me personally, I just feel that every day that passes, I can see some progress, and we really have to celebrate those. And if there are issues, again, you just got to tackle them. When you do that, you're just gonna keep getting better and better at what you do. So it really does get easier, from that point of view. But it does get more difficult from like a fundraising point of view. When you're running low on cash, you got to be like, okay, you know, I got to update the deck, update the numbers. Let's go into the market. Let's go knock on some doors. So it's very sales orientated in some points as well, which I'm okay with. That's what I did, you know, prior to Pet Bays.
I was going to ask, what did you do before?
Yeah, 15 years in sales, basically.
Sales, okay.
And I was working in FMCG. I was handling B2B across the UAE for, my clients are usually hospitals, hotels, and I was selling tissues, actually, tissues and disposables, very different. And then I started Pet Bay while I was doing, that. And so doing both was actually super, super tough to get used to. It took me about 6 months just to get used to the idea of doing that. And then eventually quit my job in 2022 and did this full time, you know.
Well, good for you. So you're 3 years in then.
Yeah.
So how is funding going? Have you been through seed funding? Can you talk about that?
Absolutely, yeah, sure. We had the founding members, me and my business partner, put the initial money. And then after that, we raised a family and friends round. And that was at the end of 2022. And we did one more sort of seed round after that. And now we're raising our Series A. Yeah.
Okay, so you're well down the road. The last thing I wanted to talk to you about, and I think this is the kind of the media thing, the slightly marketing thing as well. But you've been on Shark Tank.
Yeah, that was.
What was that like?
Oh man, it was surreal. I grew up watching Shark Tank. You know, like I watched. You know, all the judges, Kevin O'Leary, you know, I used to, despite his emotions, but I loved watching
his quirks.
His quirks, yeah, let's say. But yeah, I grew up watching it, so it was surreal. It was a bit intense, you know, being in front of a panel worth 5 billion and having the studio lights in your face while trying to put everything you know about Pet Bay in 3 minutes. It's not easy to do. I think that, especially as an entrepreneur, you know, you're so close to your brand, so there's so much to say, but to fit all that information in just a short amount of time was a bit of a challenge, but we made it through. You know, we got an offer, and what Shark Tank did for us was amazing. You know, it created a lot of credibility, not only for our brand, but for the concept of home-based pet sitting and, you know, having someone come to your house, because we really do have 5 services, and the services can actually be rendered in the pet owner's home or the pet sitter's home. So, the idea of a pet, owner allowing someone to their house might not be, or maybe it wasn't at the time as accepted as maybe some Western societies. But right now, it's because of Shark Tanking, because of what we're doing with our marketing and social media, it is actually creating so much credibility.
Okay, and you vet that as well. You could say to somebody, look, you if you're happy, your pet could go and live in the pet sitters place?
Yeah, I mean,
didn't realise
two different services. One is boarding, and the other one is sitting.
Right.
Sitting is where the pet sitter would go to the pet owner's home and stay overnight and look after the pet there. Now, it doesn't necessarily have to be overnight. They can go in and leave. And then boarding is when pet owners would drop their pets at the pet sitter's home.
Last question. We've got about 20 seconds. Where are you going next? Can you tell me in 20 seconds?
Absolutely. All-in-one pet platform across the GCC and beyond. And explaining Pet Bay in one word is choice. I think that's where we're going. So we want to really make sure that we develop the tech to reach that goal.
All the best to you. More power to you, I think. Joey Chaya is a Lebanese entrepreneur. He's born and raised here in the UAE, specifically in Dubai, and he's just turned his lifelong love for animals into a homegrown startup that is, and I quote, changing the way pet care works across the Emirates. Pet Bay is the app. Joey, good to meet you.
Thank you so much, Tim.
Appreciate you coming in. This is Mira Business FM. We're streaming live on the website, mirabusiness.fm. You can find us on YouTube. The news next.
Good morning. It's 11:30 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. And these are the top headlines. Dubai has announced 2 innovative projects to reduce traffic and improve connectivity across the city. The Dubai Loop will use tunnels to carry vehicles through high traffic areas, while the Glideways network will feature self-driving pods linking metro stations and nearby neighborhoods. These initiatives continue the Roads and Transport Authority's efforts to ease congestion, having completed 67 rapid traffic improvements across the Emirates last year, Khalij Times reported today. Dubai's air taxi project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Attire says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed the driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, a report from the Gulf News said. The RTA says these developments are already improving in mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. Moving on, the Trump administration is set to unveil its biggest plan yet to secure critical minerals for everything from jet engines to smartphones. The strategy includes international purchase agreements and a $12 billion U.S. strategic reserve to counter China's dominance. Vice President J.D. Vance will deliver a keynote at a meeting hosted by Secretary of State Marco Rubio, with officials from dozens of countries where supply chain deals are expected, as per an article on Yahoo Finance. The announcement follows Project Vault, a stockpile backed by a $10 billion U.S. export-import bank loan and nearly $2 billion in private funding. China, which controls 70% of rare earth mining and 90% of processing, restricted exports amid the U.S.-China tariff war, despite a 1-year truce agreed after talks between the U.S., President Donald Trump, and President Xi Jinping. And now a quick market and currency update. Bitcoin today is trading at $76,357 and for those tracking remittances, 1 dirham equals about 24.61 Indian rupees, 75.90 Pakistani rupees, 33.24 Bangladeshi taka, 16.05 Philippine peso, 12.79 Egyptian pound. Meanwhile, 1 British pound is equal to 5.03 dirhams today. That's the news for now. I'm back with the headlines at 12. Follow more news on X, WhatsApp, Telegram, and at mirrorbusiness.fm.
Mira Business FM, where business comes to talk.
Mira Business FM, the morning drive with me, Tim Elliott, and it's cultural heritage that we turn our attention to now, and how it's driving new business experiences here in the UAE and also, I guess, across the Gulf as well. Tourism's up, of course, particularly here in the Emirates. Entrepreneurs are now finding new ways to turn cultural heritage into unique opportunities, from things like design, I guess, workshops, to curated experiences, to luxury products inspired by local traditions. What businesses are now doing is blending the past with the present and offering both locals and residents and expats and visitors innovative ways to connect with the region's history. My guest is an Emirati cultural entrepreneur. He's the founder of Tamashi. He's a registered cultural tour guide here in Dubai, and his name is Mohammed Kazim. And Mohammed, it's very nice to meet you.
Nice to meet you too, Tim. Thank you.
Appreciate you coming in to join us today. Loads to talk about. Tamashi, first of all, what it means. Am I right in it's? I know it's to do with walking, and it's kind of. Is it to do with like bridging the past and the future or something like that? I'm looking for the translation.
Very close, Tim. So basically, what we did was we merged two words in Arabic. One word is meshi, and one word is yatamasha. Meshi means to walk, and yatamasha means compatibility. And as a brand, when we set up, we initially started as a footwear brand. And it had three social values, and each value, something was compatible with something. So for example, in our value preserving identity, the past was compatible with the present. In our value representing culture, the regional is compatible with the world. And in our value coloring lives, profitable business is compatible with doing good.
Okay, so you start as a footwear brand, and I mean that's part, but how do you get from footwear brand to full on, I don't know, is cultural ambassador a bit too much, but that's kind of where you are.
I'm laughing because I even don't know how that happened, but I think I have an idea.
Right.
But basically what we did was, in order to look for designs for every footwear collection, and in order to continue doing our social values, we needed to do some research. So we'd go to different areas of the Arabian Peninsula, the UAE, Oman, Saudi Arabia, and some of the other GCC countries. And we started just looking for content. And then, promoting this content on our Instagram, through our collections, through our designs. And eventually people would be like, why don't you take us with you? So we ended up launching cultural travel, and from cultural travel came cultural consultancy. Companies and government entities would reach out to us, asking us to please share some of this cultural information we've gathered, whether through design or through storytelling or through content or through even just reviewing content or creating strategies.
Okay. So, I mean, it used to be with the UAE, I mean, outside looking in, it used to be, I remember I went to Abu Dhabi years ago, and honestly, this is true, somebody said, so where in Wales is Abu Dhabi then? Because it sounds like a Welsh town. And I'm trying to explain a little bit further away than that. It's the other side of the world. But it used to be outside looking in, originally with tourism here, lots of people come over for, it began with oil exploration and work and infrastructure and building, and then it became footballer destination of sun, sea and sand and all those things, and it's now become a much more cultural destination. I know at Jumeirah Mosque there's always been the cultural visits there, but that's ballooned into something else now.
Yeah, totally. I mean, look, a lot of times people say that the UAE lacks culture, lacks any kind of history. But the reality of the matter is that, the UAE, the Arabian Peninsula in general was always very difficult because of the limited resources, specifically water resources. So most tribes would gather around water, and culture was created around water. And when you had limited resources, you had to create protocols. You had to create mannerisms in which you can share resources, or at least be able to, navigate through them without turbulence. And I don't say that there was no turbulence historically, but I mean, that gave birth to a lot of culture. This is not even looking at, prehistory, which is very rich. You have 80-million-year-old elephant footprints in Abu Dhabi. That's crazy. You have a serpent mount with bronze serpent motifs that was found in Al Qusais, which is right in the middle of the city. Dubai Marina has a Bronze Age tomb. My house is right in front of a Jumeirah archaeological site from the Abbasid era. So you have so much history.
You really do. I mean, I'm unaware of most of these things, and I feel slightly ignorant. But I mean, things have really started to open up. And I think maybe what you do is offer a window into another world, I think, for people. You make a very good point there. Dubai, the UAE, the region is maybe looked at by some people as not rich in cultural heritage, but it is the case that it is. And there are now these, it's available to people now, I think. We kind of forget that this was a really hard place to live not that long ago. It's pretty, it's far too hot for most of us.
That's true. That's true. And I think the challenge has always been is how can we package this in a way that's relevant to either the new generation or to someone coming from outside. I think it's always been for us. It's always been okay. History, it's our identity. But how do we package that in a way that makes it relevant to make it appealing to a younger generation, or also maybe a visiting or resident population that's not part of the identity of the region?
With you, I know, okay, so Tamashi is a footwear brand with a very specific set of principles, I guess. Your career, I read, is healthcare and engineering as well. So there's a varied path, I suppose. But what led you, what got you so inspired in, cultural entrepreneurship?
So my last position, I was the general manager of one of the assets of a sovereign wealth fund in Abu Dhabi, and I was running a spine surgery center. So I did the entire spectrum: engineering, healthcare.
You've done it all.
I did it all, from the feasibility side to the investment side to the actual management side. Right. But when we started Tamashi, it was around 2013 when I resigned from my job and I decided I want to do something. And we decided that for me, it was very fresh after the Arab Spring, and the media was entirely negative towards the region, to the point that we started doubting our own culture. Is there anything beautiful in our culture? That was a question mark going through my head. And I'm like, of course there is. It's just not being highlighted. So I think that was my main drive. Okay. And the fact that I reached a little bit of a bureaucratic ceiling at workplace. Okay. So I said, okay, let me put my efforts towards something that I can actually make results in or bring results in. Yeah. Okay. And that was my spark to shift.
I suppose there weren't many people doing that at that time either. Yeah. And it was you're kind of stepping into the unknown. So give us an example of a Tamashi project that blends heritage with this kind of contemporary attitude that you have.
Yeah, definitely. I mean, look, there's a mountain tribe in the UAE, specifically in Ras Al Khaimah, that has a wonderful folklore. They have wonderful culture. They have handicrafts of axe making, and they use these small axes. You may have seen some of these folklore. It's called a nedba, where there's a high-pitched yell, and then there are drums sometimes as well in another form of their folklore. But these guys, they use beautiful axes and they have beautiful waist daggers. And waist daggers would have, for the most part in the UAE, people would use waist daggers. So what we did was, I don't wear a dagger to the mall today, although I would love to.
I was going to say, I'm looking, but
I own one, but I just can't enter a mall with it. So what we ended up doing is we ended up taking there's these beautiful metallic rings that actually hold the dagger in place. It holds the waist belt in place. So we took those rings and we contemporized them. We used them as zipper heads for laptop sleeves. We used the beautiful patterns that were on the axes and put them onto a laptop sleeve or onto a wallet or onto footwear. And that way we preserve something very ingrained in our culture and very rooted, yet in a very contemporary way that makes sense to me, to you, to anyone who would be passing by the retail space.
You started to see more and more of these kinds of things. I was bought a T-shirt a couple of years ago, and it was part of the keffiyeh, the Palestinian headdress, and I really like that. I feel like it's got a real sort of contemporary identity, and it's just a pocket on a T-shirt. Those kinds of things, and it's also a little bit different from the traditional kind of silver dow or the coffee pot that we've all seen to death, really.
Correct. And I think that's going back to the relevance point. You need to make it relevant. You need to make it appealing to the audience, to all audiences. And the UAE being such a diverse place, I think it's almost a duty for us to be able to take this culture and export it, but in a way that's relevant to everyone.
Yeah. Okay. Without over I don't know, there's always this balance, isn't there, between making something accessible, but a little bit too saturated, a little bit too overpopular, and you have to kind of walk that very fine line, I guess. What's the appetite like, Mohammed, for cultural experiences? You're in this industry for what, 12, 13 years now. What's the appetite like for locals broadly, as in residents, people that live in the UAE, and for tourists?
I think it's growing more and more, and with us, about 30% of the people that travel with us or that buy our products are non-Arabs. About 20% are non-GCC Arabs, and about 50% are GCC Arabs, mainly being Emiratis and Saudis, and Kuwaitis. But I think it's growing. We're seeing this demand from all aspects. We even have visitors, not residents, that come from across the world. Like we have a lady who's become a dear friend now, who traveled with me. She's from Mexico, lived for a bit in Egypt, but decided to travel with Tamashi to different areas in Saudi Arabia as well as the UAE. So that for me is beautiful.
Yeah, that's very cool. What kinds of experiences do people come to you for? Because I know you do lots of different things. I know that, but I mean, it always struck me. But if I have family come over, I know it's corny, but I always say the desert trip is a thing you should do, because there's something about that. It's just being in the desert. There's something about being in the desert. Forget the four-wheel drive experience. But what kinds of, I'm not saying that that's what you're doing. I know you do other stuff, obviously. But what kinds of experiences do you find people are demanding or really looking for?
So the desert is beautiful, and it's a very important part. I mean, I think that's another thing. See, the UAE is very diverse in its landscapes. We have deserts, we have oases, we have mountains, we have plains, and we have the coast. And each one of these comes with a culture. I think what people want to see is that we're not just monotone. We have more than one layer of culture. So yes, people want to go to the desert, and that has to be provided, and they want to do something authentic. So at the same time, they want to see the old homes in Al Fahidi, in Al-Shindagha. They want to learn about the architecture. They want to know why the architecture is such. They want to learn about the food. They want to know why the food is different layers. If you have 5 different landscapes, that means you have 5 different types of food, and how each one affected the other, and the historical layers of that, how it evolved to reach where it is today. That brings me to another point, which is we always try so hard to preserve culture or preserve identity, and we always go back to a point in time where we think that identity was static. But identity really evolved, and it continues to evolve. And that's the part where I think the oil development burst that happened after the 60s made that development stop. And we're trying to hold on to that old part. But what we do at Tamashi is we actually try to take that old part, try to develop it organically to be able to go with the modern times.
Culture's like language, isn't it? It's continually developing and moving forward, or perhaps sideways. It's a hard thing to pin down. It's challenging, though, I guess. You're balancing kind of preservation of heritage, the preservation of culture, trying to pinpoint that. But obviously you work in a modern age. You have objectives that you want to do. How do you walk that line?
It's also challenging because, again, you have people who really think culture should be one way. And when it comes to...
the old ways are the best ways. Yeah.
Exactly. And when you come and tamper with it, they're like, no. So I think what we try to do is we try to preserve the soul of the culture. So we would never, for example, one of the things I can give you as an example, in Arabic culture, the foot is considered something low. And if you put something under your foot, it would be demeaning. So having cultural patterns on footwear is a challenging thing on its own. So how do you package that, and how do you put it out there? Of course, we do it in a very contemporary way where it's not too obvious. If I took an obvious pattern or obvious calligraphy, put it on footwear, it would be demeaning to the Arabic language. But when you take an abstract version of that, you suddenly diffuse the tension and suddenly become something new. So it's no longer demeaning the footwear. So again, we think about these things and how we package them and how we message them to or release them to a broader audience.
Okay, so you can see the evolution from the footwear brand into everything that you're doing now as well.
Exactly, yes. I think, and that's what happened, right? So when we started researching for design, people started asking us to travel, that they would want to travel with us. And then companies and government entities were asking us for consulting help, either with design, storytelling, or strategy. So I think these kind of things all organically came just from a research space.
You're doing the right thing, I suppose. So if I was to come to you and say, look, Mohammed, I want to do something that really teaches me about the history of, I don't know, Ras Al Khaimah or just the UAE, can I go to, spend some time with the mountain tribes and see those daggers, if you like? Could I buy one of those? Whatever. What would you kind of think? Here's an itinerary that I think you might be interested in. What kinds of things would you offer?
I mean, it depends on the person and their interests. But in general, like people like a combination of outdoor stuff. They like to meet people, and they like to also buy things or taste things or eat things.
Yeah.
So, so what I usually do is at least in the UAE, I tell people to go to mountain villages where culture is still very much alive in their daily lives. We have a beautiful village called Taiba, for example, in Fujairah. Taiba is close to Masafi. Most people may have heard of Masafi, but there's a nice little fort. There's a little Airbnb there. There's a nice private museum where people can go just speak to the locals and learn so much from. Or they can register on a Tamashi trip, and we can take them on a full-on immersion.
Okay. I mean, most of the work that you do is here in the UAE, but obviously you're very much a person that is aware of the region. You're part of a much bigger region. You take trips to Saudi Arabia as well. And I know you're just back. I want to sort of concentrate on the UAE, but I'm fascinated with this trip that you just got in, late last night, didn't
Yes.
you? From a trip to Saudi Arabia.
Yes, I was in the northern part of Saudi Arabia, a place called Al Jouf. It borders Jordan, and the tribes there are very similar to the Jordanian tribes as well. It's a mixed place, so it has a lot of history. One of the most popular towns there is Domat al-Jandal, which is known as Adomato, as documented by the Romans, and also in the Bible, I think it's known as Doma, and Doma was one of the sons of Ishmael. So you can imagine how much history there is.
I know, I can. And that's how did that come about? Was that just a website inquiry? How does it happen?
When we were researching initially, for us, it was about getting new information about the Arabian Peninsula. And I think one of the things that came up for me was that there's a large olive oil production coming from Saudi, and I was like, this is very interesting. Where did the olive trees come from? So I started looking, and then found all these beautiful details about this region, the history, the forts. There's a fort called Marid that Queen Zenobia of Palmyra mentioned that she couldn't penetrate. So again, there's so many beautiful facts that came out. I was like, you know what, I should do a trip here, and we started promoting it, and people started signing up.
So it's as much, I think. I mean, I get the feeling, and tell me if I'm wrong, but your attitude, and I mean that in a positive way, is very much, that's cool. I'm going to go and look at that, and people should be aware of that. People should be, there should be an opportunity to experience that. Is that kind of your mindset?
Definitely. I mean, I like to think I'm very entrepreneurial in my thinking. So I try to, and not from a business point of view, but more from a making things happen point of view. And I think, of course, for me, showing the beauty of the Arabian Peninsula is a passion. Whether it's in Saudi, whether it's in the UAE, whether it's in Oman or any of the other GCC countries, and hopefully when things stabilize, Yemen as well. Yemen is beautiful. It has so many beautiful cultural elements and history that needs to be presented to the world. In fact, on that point, in Sharjah, they found a tombstone with ancient Southern Arabian script, which you can see also in Yemen, which is beautiful. I think the link of the Arabian Peninsula, even historically, has been so rich.
It's nice to hear that there's a lot more. Traditionally, it's this region. It's Lawrence of Arabia. To lots of people outside, it's just sand and there are camels and there's an oasis there. That's what it is. But if you travel to Yemen or Oman, topographically, geographically, completely different in almost every way. And as you say, look at what we have here in the UAE, from the mountains to the sea to the deserts. To get that across to people, I think it's really important. It's kind of going to be for you. It's going to be a life's work, Mohammed.
I think it's already been.
It seems like it.
Almost a quarter of my life spent in doing this. But there's that part. There's also the mannerisms part. I think we tend to neglect that. So, for example, in Wilfred Thistsinger's book, or I think maybe it was Wilfred Thissinger in Arabian Sands. He mentions a story of a Bedouin man throwing a date pit in a fire pit actually, and the Bedouins getting angry. He threw the date pit in the fire, and the Bedouins got angry because they saw that as a resource. and a resource is being wasted. So imagine the mannerisms, the mindfulness of wastage and how to preserve resources. All these things, they stayed in our culture in one way or another.
Yeah.
Some things may have changed, but some things stayed very, very much ingrained in us. So yeah, all this is definitely a life's work.
I mean, but that's something worth preserving, isn't it? That attitude to, you could use that for something else. That's something that we've kind of unlearned, I think. That book, Wilfred Thester's book, Arabian Sands, that's a must-read, I think, to anybody that is spending any time in this region, in this country. Let me ask you a couple of quick questions. We've only got a few minutes left. How do you see Tamashi evolving over the next 5 years? What have you got planned? And I'm thinking in terms of experiences. And the trick now, I guess, is you're going to be outreaching, further, broader, more internationally, aren't you?
Looking back 5 years, right? When I was asked this question, I said I wanted to expand each one of Tamashi's streams, which is travel, consulting, as well as footwear. I think there's still room to expand in each one of them, and I can give an example. So, for example, for trips, we used to do trips to Amman, to Al Dakhiliya, but they were just basic trips. But now I go more specific. So we go into harvest seasons. I'm doing a trip for the sugarcane harvest season in a week's time. Okay. We did a pomegranate harvest season. So we're going more specific. And so in every part of Tamashi's journey, I'd like to not just specialize, but also diversify and increase the scale of what we're doing. That would be my ideal 5-year plan. And perhaps take all this knowledge and give it to some government entity somehow, either as a full-time employee or as an advisor. I think that would be something that I would like to do on a personal level.
Okay, so what about your corporate friends from back in the day before you launched and decided, no, I'm going off on my own? How have they reacted to what you've been doing?
So I think what happens with corporates is that you get sucked into routine, and for most of my friends who remain, they're doing very well. They're very high up in either in semi-government companies or in the government, and they're doing very well. But one thing I notice is they're stuck in routine, and that routine kind of disconnects them from I don't want to say the reality, but disconnects them from life. And I think life is. It's so important to live, to meet people of all different levels, to learn about history, to learn about its implications on the future. I think that's the main difference. And if you ask me what do they think, they probably think I'm crazy.
They might be right. You never know.
I agree on that.
Final question for you then. I'll probably think of more questions. I always do that. Final question, then I think, oh no, I have to ask this as well. What advice do you give to people? You've been doing this for a long time, and you started in a sector that was underrepresented, kind of not unexplored, but there was stuff to learn, obviously. If you want to, combine business and business acumen, the things you've learned, with having a real impact culturally, and it's important to do that, I think. We're broadly very multicultural, but when you're multicultural, you lose parts of, inherent culture, I think. What advice would you give to somebody thinking of a course like that?
I think one of the things that immediately comes to mind is that there's not enough information, and that information is difficult to get, and that the industry seems underdeveloped, so I don't want to waste my time on it. So what I would say is actually just take the initiative. And as soon as you take the initiative, you'll see things are available and information is available. It's come such a long way in the last 10 years. I remember 10 years or 12 years ago when I was looking for information, I had to go back to Orientalist books to be able to learn about the peninsula. But today, fast forward 12 years, you have so many Arab scholars that have written from an Arab point of view. So there's more content available. There's more room to do things. And I think that, and it will continue to be so, I believe, because each one of the GCC countries at least has a cultural strategy in place which is promoting cultural initiatives. So I think my advice would be just take the initiative, just look for it, just search under the surface, and you'll find a ton of information and a ton of things you can do.
And what about in terms of when you started this? How was support for a venture like this? Were people... Maybe you are the crazy man starting a venture like this, but did you feel that you were supported? when you launched?
Look, the government has some good initiatives for entrepreneurs and SMEs. However, they're superficial initiatives. So they support. I don't say they don't support, but I think most of the work was done by us. Their support definitely gave us help, especially in tough times, like in times when COVID lockdowns happened and travel was difficult. We got some good support. We got some good contracts from government entities or semi-government entities, which kept us going. And I would never discount what they've done for us. But the social support, and the kind of support that would make sense to us wasn't available, and I think still probably isn't available because there's not many people doing what we do. And if we did, I'm sure that support would come. If there was enough of us, that support would come because our voice would be heard.
There's room to grow, I guess.
Yeah.
Well, let's stay in touch, and hopefully you'll come back and visit us before the 5-year timeline that I kind of set out there. Mohammed Kazim is a cultural entrepreneur. That's a way of putting it?
You could put it that way.
He's the founder of Tamashi. He's a registered cultural tour guide here in Dubai for the UAE and beyond as well. It's been fascinating. Thank you.
Thank you. Thank you for having me.
Appreciate you coming in. This is Mira Business FM. It's the Morning Drive. It's the news next.
Mira Business FM, Dubai's home of business radio.
Good afternoon. It's 12:30 p.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. And the top headlines: the Sharjah Chamber of Commerce and Industry has met with the Vietnamese trade delegation to discuss expanding economic and investment cooperation between the two countries, Emirates News Agency reported. The talks focused on strengthening private sector partnerships under the UAE-Vietnam Comprehensive Economic Partnership Agreement. Officials noted that the trade between the UAE and Vietnam reached around $7 billion in the first half of last year, with the UAE's non-oil exports recording strong growth. Discussions also covered opportunities in logistics, manufacturing, pharmaceuticals, smart technology, food production, and supply chains. Both sides described the visit as a strategic step toward deepening business ties and increasing bilateral trade, with Vietnam highlighted as a key gateway to wider Asian markets. Moving on, Dubai has announced 2 innovative projects to reduce traffic and improve connectivity across the city. The Dubai Loop will use tunnels to carry vehicles through high traffic areas, while the Glideways network will feature self-driving pods linking metro stations with nearby neighborhoods. These initiatives continue the Roads and Transport Authority's efforts to ease congestion, having completed 67 rapid traffic improvements across the Emirates last year, Khaleej Times reported. Also, Dubai's air traffic project is now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al-Tayr says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, a report from Gulf News reported. The RTA says these developments are already improving mobility, with taxi waiting times reduced from 25 minutes to just 3 minutes. Gold and silver prices rebounded strongly on Tuesday after a historic sell-off. Spot gold jumped about 6% to $4,930 an ounce, while gold futures rose around 6.4% near $4,949. Spot silver climbed over 6% as well to approximately $84 an ounce, with silver futures up nearly 10% at $84. The recovery followed steep losses, including a near 10% drop in gold on Friday, with a roughly 30% collapse in silver, its worst day fall since 1980. And this was according to CNBC report on MSN. That's the news for now. I'm back with the headlines at 12:30. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
Welcome back to Midday Majlis, coming to you live on Mira Business FM. And now joining us online from Canada is Fadi Habib, who is a financial markets educator who helps people grow their money responsibly in the stock market. Today we'll be talking about financial literacy, smart investing, and clearing up common stock market misconceptions, all aimed at helping our listeners make informed decisions about their money. Fadi, welcome to Midday Majlis.
Hi, Sahar. Happy to be here.
It's really good to have you with us. And I know it's 3 a.m. there in Canada. It is really early for you, but thank you so much for being
Yeah.
able to join us.
Thank you very much.
Can you please tell us
You're welcome.
about your journey and how you became a financial educator?
So, when I was a kid, I did everything my family told me to do, mainly get good education, get high grades, get a good job when I graduated. So I graduated from engineering, 20 years old. And all of my life I had high-paying jobs, but my issue was that I could not get the car that I wanted, could not get to the trips, all the trips that I wanted. So I was consumed with the idea of building wealth. And my father is a doctor, he's not an investor. So their money-making mode is just being an employee. So I read this book called Cash Flow Quadrant, and I learned very quickly that there are 4 ways to make money. Employee is where everybody is being pushed at or groomed to be, and it's really not the best deal being an employee. So basically, I learned that I should be an investor, but I did not know how to be an investor. I had to educate myself, go to a lot of courses. So I started with real estate investing, did a lot of mistakes, but did very well. And then 15 years ago, I had this view that anybody who invests in stocks and options, or stocks mainly, is an irresponsible investor. And I had this view because everybody around me was losing money in the stock market. So anyway, when I was introduced to it, I did very well. They asked me to coach people for them. So I've been coaching people for the last 12, 13 years. And then last year and a half, I did my own company to do it, basically to teach people based on my mentorship, my
Right.
design of looking at how to do this properly.
As a financial coach yourself, why does financial literacy matter so much today?
I talk to a lot of people, Sahar, and I talk to a lot of people from the US, Canada, Europe, and the Middle East. And it doesn't matter where you are, people are really hurt financially everywhere. It's a very important topic, and people need to know that there are tools out there and there are proper way of investing. One of the issues that I'm seeing is that there's a lot of scams out there. There's a lot of miseducation. There's a lot of hype. There's a lot of myths around. You can make money very quickly, and if you just do that, we can get like, I don't know, $100,000 in 2 weeks. So there's a big need for that because it's a great way to make money, but also it's a great way to lose money if you don't do it properly. And with all the misinformation out there and get rich quick schemes,
The scams, yeah.
it's scams, yeah. So I just had an interview with one of my students. He got scammed with $500,000. The interview is on my YouTube channel. And basically, it was a pump and dump scheme. They take you to these WhatsApp groups and they tell you what to buy and sell. And they really have bad motives. And the guy lost $500,000. So lots of scams out there. So people need to be careful with their money, and they need to understand that basically with extremely high ROI, there's also very high risk. ROI and risk don't get separated.
And how do you
So
think people nowadays, many of them, they actually feel intimidated by the stock market? And I think you were talking about it, like how, you have also lost a lot of money back then when you started. So what are some practical ways beginners can start investing and growing wealth over time?
It actually starts with understanding the proper market behavior and understanding that there's a lot of myths out there about the stock market. One of the myths is that you can make money very quickly, or you see, and the problem is that there's a lot of ads out there that tell you that day trading or if you just buy some crypto, you'll be very rich very quickly. This is not really accurate.
That's not how it works.
Is
Yeah.
yeah, this not doesn't this is not how it works at all. Investing is a little bit of a long-term strategy. Okay, it's you need to have a long-term view. Anything that sounds too good to be true is probably not true. Okay, first thing you need to know is that it takes a little bit of time. Okay, and it is not gambling. A lot of people approach the stock market as if it's a big casino. We are buying and selling businesses, and people sometimes spend more time researching a refrigerator if they want to buy a refrigerator, much more than buying the stock. Even real estate investors, I see them do the same issue. When you buy a rental property, a prudent, responsible investor will ask, how much rent does it get? What are the expenses? Is it cash flowing? What is the cap rate? All of these questions to figure out if this is a good investment. For some reason, when people go to the stock market, even real estate investors, they forget all of that. The extent of their research is just one of their friends told them to buy a stock. For me, it's very simple. If you bought any stock without looking at the income statement or the balance sheet, you're really a gambler, right? Because you're buying and investing in a stock, in a business. So you need to understand that the stock is doing well, the business is doing well. Another myth that is out there is that the stock market goes in a straight line. It doesn't. It mimics breathing. It goes up a little bit and goes down. And we have the statistics. Out of every 5 units of time, 4 of them, the market, and I'm talking mainly about the US market, 4 units of time, it will go up or sideways, and 1 unit of time, it will go down. Okay, so overall, the market is going up by about 10, 11% for the last 50 or 100 years. So it's going up, but it doesn't go up right like all the time. So it is totally normal. People need to understand that it's totally normal that the market goes up and down, and there's nothing wrong with it correcting.
Right. And what is it that they should do in order to understand about balancing risk and reward? How can they do that?
Okay, very, very important in the stock market versus the real estate. Real estate cycles are a little bit long. Takes so much time to go up and down. In the stock market, it's very volatile. So to balance risk and ROI, you need to understand how you need to study for every strategy you use, how other people lost money in the same strategy. Because if you are not aware of the risks, you'll be the next one. So as a fundamental rule, risk and ROI are a couple that can never be separated. So if there's something that you're seeking, if the strategy that you're seeking is telling you that it will get you 100% every year or 50% every year, understand that the risk involved, whether you are aware of it or not, it is there and it's humongous, because that's really huge ROI. People need to understand that even Warren Buffett, his average return per year is 19.6%. So if you go for 100% or 50, that's really too high. With some of the strategies, it is very important that you never use something called margin, meaning you don't borrow to invest in the stock market, especially from the brokers, because it has really devastating effects if you do that.
Right.
I
And
will never.
also to always remember that, of course, what goes up goes down, as you mentioned a while ago.
Overall, I don't completely agree with what goes up, goes down, because it gives the impression that there is no profit. No, there is a lot of profit, but just the behavior of the market is that it goes up slowly, 4 units of time, and goes down 1 unit of time quickly. It's just normal, but overall it's
So
going up.
it's a normal
But
cycle.
yes, correct.
Right. And then financial literacy isn't just about stocks, right? How can people apply these principles to daily money management as well, such as budgeting, saving, and planning, let's say?
The formula to get wealth is actually very simple. It's that you have to spend less than what you make. And this is becoming really difficult everywhere because people want to keep appearances, especially young people want to look cool. They want to buy the latest.
Follow the trend.
It's very, yeah, follow the trend, look good. So very important that you understand, you need to be aware. One of the main things that I used to do in the beginning of my career and my life is you gotta understand what is your expenses. So every 6 months or so, you need to stop, look at all the different sources of income you have and all the expenses. And there's a lot of software tools out there that can log everything. So you can download from your bank all the different expenses, and you need to become aware of what is it that you're spending money on in. Okay, that's the first thing, is that awareness. Number two, you need to consciously make the decision that you're going to put some money aside every month to invest. I don't like to use the word save, because saving cash is one of the worst things you can do because of inflation. So you need to invest. You need to find an investing vehicle, mainly real estate or stocks, and you need to put that money each and every month, regardless of the market going up or down, because the road to wealth is about investing and not saving. So understanding your expenses and income, making the conscious decision to spend less than that what you earn. Not only that, you keep X amount, 20% or 10% aside to invest. And investing takes a little bit of time, but it's very rewarding with compounding.
Right. So you're suggesting that saving money aside is not going to help in a long run, but investing into something is definitely going to grow your money over time. And this is,
Saving money is, yeah, saving money is one of the worst things you can do. Saving money, and our parents didn't really understand this very much. Saving money meaning save money at the bank, cash. That's the worst thing, because everywhere in the world there's something called inflation, meaning your buying power. If you have $1,000, if the $1,000 will buy you whatever thousand pence right now, tomorrow or after a year, this $1,000 will buy you $900. You can buy 900 pence with it. After 5 years, you can buy 700 pence. The buying power of the same cash goes down because there's inflation. So please don't save, invest.
don't save and invest. Okay. Now that's a great advice. Moving on, you're actually based in Canada. Are there any lessons that apply universally for our listeners here in the UAE when it comes to investing?
Investing rules goes everywhere. It's the same thing. So do not trust get rich quick schemes, because they never do. Invest responsibly, meaning you need to have a strategy, understand a strategy very well, and you need to understand the risks involved. For me, my formula is 10% strategy. So if you go to YouTube and learn a strategy, that's not enough. 30% is risk mitigation. Understand that you need to understand the risks involved and mitigate them. 60% is psychology. Understand that you need a healthy dose of fear and greed. If you're too fearful, you will do no action, because you will be paralyzed. A lot of engineers like me like to dwell in this analysis paralysis. We think that's an action, but it's not really action at all if you think about an investment. So fear is important, that you have a healthy dose of fear. Also, if you're 100% greed, you will lose money very quickly, because all what you'll be seeing ROI. So you need a healthy dose of fear and greed, and you need to know how to manage them. Also, you need a proper objective. The objective for me, my target is about usually 24% ROI per year. If you go much more than that, understand that the risk is very high. So for me, this is a sweet spot whereby it's a good ROI, it's double what the market gives, but also at the same time balancing risk. It's not too much risk for me as well. The last thing is, when you learn a new strategy, do not commit money to it right away. Open something called a paper trading account. A paper trading account is free to open, and a paper trading account allows you to test. They give you $1 million monopoly money to test, to try your strategy. So if you win, you don't win any money. If you lose, you don't lose your own money. It's a free account and $1 million monopoly. It's a really great way to test any strategy, and you don't commit any money in your account before you prove to yourself that you can make
You're
money in
capable
the
of
paper
doing
trading
this.
account.
Right.
Yeah.
Yeah. And what is your advice to our young listeners or investors? I would say we did talk about how the young investors or the youngsters are more into following trends these days than actually investing or even saving up. So, what is your advice to them?
Um, Investing is not supposed to give you adrenaline kick. I know people like to put their money at risk because it gives them a kick. There's so look what happened to the stock market. Uh, Proper investing is actually very boring. My advice to them is to not follow the get rich
Strategies.
quick scheme.
Yeah.
Yeah, and to invest early. The more you invest early, the rewards are tremendous because there's something called compounding and there's a rule called 72. With compounding, if you take 72 divided by the ROI that you get every year, it will give you how many years it takes to double your money. So let's say your ROI is 12%, 72 divided 12 means it takes 6 years to double your money. Every 6 years, you'll double your money. Um, if your ROI is 24, it takes 3 years to double your money. So compounding, especially if you start early, has beautiful results, and only the young people enjoy that because they have time. One of the things that Warren Buffett usually, when they ask him, why did you have so much success? One of the main reasons he says is that he has good genes, meaning he lived a long time, means he allowed compounding to help him a lot. So invest early, invest responsibly, um, and don't go for get rich quick schemes.
Right. And of course, be aware of scams out there as well.
Yeah, yeah, be aware of
Right.
scams.
Fadi, thank
Very
you
important.
very much for being able to join us and for sharing such practical insights with our listeners today. We wish you a great day ahead. And thank you again for
Sahar,
joining us.
thank you very much.
That brings us to the end of today's Midday Majlis show, which was coming to you live on Mira Business FM. And I will be back with more engaging conversations and interesting discussions. Do not forget to like and subscribe to Mira Business FM. Until next time, this is me, Sahar Mushtaq, signing out. Good afternoon. It's 12:30 p.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. And these are the top headlines. The UAE Ministry of Finance has strengthened international partnerships and discussed the future of fiscal policies at the World Government Summit in Dubai, which runs from February 3rd to the 5th. Minister of State for Financial Affairs Mohammed bin Hadi Al Husseini said the UAE is committed to shaping global dialogue on economic policy making and building more resilient, sustainable economies in the face of economic, technological, and geopolitical challenges, according to the Emirates news agency WAM. Sessions at the summit focused on fiscal sustainability, digital transformation, and the responsible use of artificial intelligence in public financial management to enhance transparency, efficiency, and stability. The ministry also co-hosted a GCC session on economic transformation and fiscal and monetary integration, signed memorandum of understanding with Kuwait to strengthen bilateral relations and promote financial cooperation with Bermuda to expand cooperation on fiscal policy, budgeting, taxation, and public financial management. The Trump administration is set to unveil its biggest plan yet to secure critical minerals for everything from jet engines to smartphones. The strategy includes international purchase agreements at a $12 billion strategic reserve to counter China's dominance. Vice President J.D. Vance will deliver a keynote at a meeting hosted by Secretary of State Marco Rubio today with officials from dozens of countries where supply chain deals are expected, as per an article on Yahoo Finance. The announcement follows Project Vault, a stockpile backed by a $10 billion export-import bank loan and nearly $2 billion in private funding. China, which controls 70% of rare earth mining and 90% of processing, restricted exports amid the U.S.-China tariff war, despite a one-year truce agreed after talks between U.S. President Donald Trump and President Xi Jinping. Gold and silver prices rebounded strongly on Tuesday after a historic sell-off. Spot gold jumped about 6% to $4,930 an ounce, while gold futures rose around 6.4%, near $4,949. Spot silver climbed over 6% to approximately $84 an ounce, with silver futures up nearly 10% at $84. The recovery followed steep losses, including a near 10% drop in gold on Friday and a roughly 30% collapse in silver, its worst one-day fall since 1980. This is according to CNBC report on MSN. And now a quick market and the currency update. Bitcoin today is trading at $76,176, and for those tracking remittances, 1 dirham equals about 24.61 Indian rupees, 75.90 Pakistani rupees, 33.24 Bangladeshi taka, 16.05 Philippine peso, 12.79 Egyptian pound. Meanwhile, 1 British pound is equal to 5.03 dirhams today. That's the news for now. I'm back with headlines at 1. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
Good afternoon and welcome to Midday Majlis with Sahar Mushtaq on Mira Business FM, where conversations connect and ideas come alive right at midday. Before we dive into today's discussion, don't forget that you can catch us live on Mira Business FM, streaming now on YouTube, Rumble, Facebook, and Telegram. Our podcast is also available on all your favorite platforms, anytime, anywhere. And today, joining us on the show is Savannah Saverne, a seasoned real estate professional with experience across both the UK and the UAE markets. She brings over a decade of expertise helping clients buy, sell, and invest in property. Welcome to the show, Savannah.
Thank you for having me, Sahar. It's a pleasure.
Now, Savannah, we know that Dubai is widely recognized as a Tier 1 global city from an investment perspective. What does that status really mean, and why does it matter for investors these days?
So a Tier 1 city was ranked and formulated by a Japanese company called the Mori Foundation. Now, what that does is they measure the magnetism of a city on a global scale. So historically, you'll have the likes of London, Paris, New York, Shanghai as the global players. And Dubai, as of recent years, since 2024, has been deemed as a Tier 1 city. Actually ranks ninth in the rankings. London's number one, but over recent years has actually been in decline. So what it does, it measures it over six metrics: cultural interaction, livability, the environment, the economy, research and development, and the last one is I think it's cultural interaction. So it measures it on these six key metrics, and what that means is it's competing as a global player. Now, what's very interesting from an investment perspective is that Dubai is only 25 years young in real terms. And where investors are noticing Dubai competing with all these other Tier 1 cities who have been around for hundreds
of the world for many years,
for over hundreds and hundreds of years, where it highlights an opportunity is that Dubai isn't priced as a Tier 1 city yet. So you've got all these international players are starting to catch on that whilst it's competing with these other Tier 1 cities, it's not priced there yet. So you've got a lot of international and foreign direct investment coming into the city to capitalise on where the current prices are sat, to reap the benefits as time does its heavy lifting, as the government introduces many economic agendas and social agendas to keep boosting the city's global recognition. And it's a really exciting time for Dubai and the UAE, as well as where investors can come in and where they can potentially exit later down the line.
Right. And as we know, the UAE property market attracts a lot of international buyers all the time. And the rules and practices can be very different from other countries. Now, we know that you have experience working in the UK and now here. So from your experience, what's the biggest difference between buying property in the UK versus in the UAE?
I arguably think it is down to two things, the pace and the mindset. Things in Dubai and transactions and the processes move extremely quick. The UK, for example, where I've worked predominantly, it's a lot slower. It's much long-term mindset, quite a lot more emotional when investing there. But Dubai is very quick, very transactional, very strategic. And it's where a lot of the global opportunistic investors are coming. So that's the main difference, definitely the pace of the market and the way it moves.
That's very interesting, and I didn't really realize the processes were that different. So it is really important to know the local rules exactly before you jump in, right?
100%. Anyone looking at Dubai, it's a foreign thing to look at a different market, and when you're so used to the way things work in your own home country, you're conditioned to understand your own rules and regulations. Unfortunately, post-2008, Dubai transitioned into a very transparent and very regulated market. It wasn't always like this, but the government knew that if they needed to compete with other global cities and really position themselves to be in the top, at the top with all the top players, that they had to introduce these. So you've got various reforms like escrow accounts, the COOD registration, everything is digitally recorded for everyone to see. It's super transparent, whereas other markets, they're a bit lagging behind. Dubai is very, and with the UAE,
when it comes to that.
Very forward thinking.
For sure. And do investors think differently in London compared to Dubai, as they're both very popular cities? And if so, then how?
When looking at the two, London tends to be about long-term capital preservation as opposed to quick, short wins. It's a lot more emotionally led, and London and all the other big cities in the UK, it tends to be you have two different strategies that you could potentially employ. It would either be buying the worst house on the best street and renovating, and that would be your...
Which might be a lot of work.
Yes, and that would be your flip in the UK. Or you would buy a property and just rent it out. Here in Dubai, because it's so new and it's in its infancy, there's a lot more strategies that you can employ. However, you have to be extremely strategic when executing things here because there's so much choice, so much competition. So So you have to be even more so selective in Dubai versus the UK.
Wow, that makes a lot of sense. And how different is it working with someone buying a home versus someone buying purely for investment purpose?
Very, very different. So I speak with an array of clients from all around the world on a daily basis, and everyone has different priorities. But when it comes to buying something for personal use or an end user, so to say, versus someone investment, the main crux of it is that one is emotional, and their priorities are completely different to someone who's seeking the maximum amount of returns in the quickest space of time. People who are buying a house, their priorities is how close is it to my child's school? How quick is it to my work? Is there green spaces? Because that's what I crave as an end user. Is it close to a nice mall that I like to go to? They're the priorities that you look to. Investors tend to think
differently.
They want to know, right, what's my entry point and what am I potentially exiting at? They also will think about what's coming, the malls, schools, because that's what's going to attract the end users, their end clientele, the person they're going to rent it to, the potentially person who they could potentially be buying it off.
Exactly.
So they also have to think about that, but it's a lot less emotional. They don't tend to look at the glossy brochures or care about the surface level conditions as much.
Right. And are home buyers more emotional in their decisions as compared to investors?
Definitely. I've got clients, if it's purely investors, that will not even look at what the project looks like. They care about the data, the comparables, and what their return on equity or return on investment will be at the end of the day. If it makes sense from a financial perspective, they will go ahead. They're not necessarily thinking about what the community has or how close it is to the shops. That's not their priority. Their priority is getting in and capitalize on a low price, and they want the highest yield and the highest returns. But you also do have to explain to them the emotional side. When you're buying a house, no one wants to buy a house and it's not going to make money. You're not going to buy a house.
True.
You always have to, when it's emotional, that you follow the emotion, but you justify the purchase with the logic. So you always have to look at that element as well.
And so, yeah, the emotions definitely play a huge role there. And I think a lot of listeners will relate to what you've just said, that, making those right choices is the most important thing. Like, you've got to, whenever you're thinking of buying a house, that's for personal use. You, of course, do think of places that are close to you, for example, schools where your kids are learning, hospitals, for example, as well.
Exactly.
And you've also mentioned the green spaces, which are really good for our mental health as well and our well-being. And now moving on, what do first-time investors in Dubai usually get wrong?
First-time investors, the two things that really stand out is that they look for the lowest price and they also follow market hype. Now, buying 5 cheap units doesn't necessarily mean that it will outperform one great one. You have to look, as I mentioned, beyond the surface level conditions. You need to look at the demographic who's going to be renting, what's going to be coming into the area. You need to look at all of these fundamentals, the developer you're going into, the quality of the developer when they're handing over.
Yeah, that's a great point.
And a lot of people don't do their due diligence when looking at the market. And without that, it carries a lot of risk. Because you can see there's so much choice here that it can be very overwhelming for someone looking at the market first time. That's why I would always recommend speaking with an advisor who can weigh up the pros and cons. Just like an end user looking for a home, they might have an idea of the community that they want. If they're not familiar with Dubai and the schools and what actually meets their requirements, there might be another community just down the road that has better value, that actually works even greater for them. So it's just educating clients to help them avoid the mistakes that a lot of first-time investors make.
And do you see people making these mistakes all the time?
A lot. And it's mistakes that can actually be avoided. A lot of misinformation and hype. You do have a lot of agents out here who have come out on a whim, and it's all about quick wins. What can I push and how quickly can I get paid? And that's not what advisors do. Advisors will sit down and educate people and spend their time. They wouldn't even necessarily,
And they would care about the long-term planning as well.
it's all about long term, and that's what I've been used to in the UK market, building up relationships over a long time and working with people on trust and transparency. My whole focus as an advisor isn't selling. I hate that term of being a salesperson. It's much more about education. My first meetings with a client, we wouldn't even look at a product, wouldn't even talk about a developer. We would talk about the process from start to finish, the pros, the cons, the risks, the entry points, the exit points, different strategies. It's all about organizing and collating this into very structured segments for the client, because they might think they want something, but it's not actually what they want when you really break it down into different fundamentals and metrics that go into an investment.
Right. And sometimes it's also the look of the product as well that really kind of like gets their attention and they want to get it, despite looking at the location of where it is, right? Now, that's also something, because when you're coming, for example, let's say from Canada or from North America, South America, somewhere, you don't know the GCC that well and where exactly are the locations of these new developments, right? They're happening all the time. This is actually happening all the time. So do you see that happening as well?
I see it every single day. I'm a big believer in the fact that brochures do not deliver buildings, developers do. So a developer, when recommending any investment, I'll always break it down into 3 core pillars. And the first one is developer. Now, there's over 200 developers in Dubai, and you have some great developers and you have some average developers. And if you don't understand and have the experience in how to establish what a great developer is, then that carries so much risk. We will go into such great detail in which developers we work with. There's over 200. We probably only recommend about 10 to 15 that mitigate any risk from a risk perspective. And we will look at their occupancy rates, the investor end user split. We don't want a building just full of investors. That's not going to be good for you as an investor, because your competition is going to be significantly heightened. The materials that they use, do they hand over on time? There's so many fundamentals that go into the recommendation for a developer that you have to do your homework. You have to have an advisor who can educate you on what a reputable developer looks like. But even though you have that reputable developer, they might be launching in a location that
absolutely
is too mature. You're not going to see the 8-10% yields that were once in that area, because you're unfortunately too late to that area to see that. It's already at its peak. So there's a lot of due diligence that has to go into it, and buying just from a brochure, it just doesn't cut it in this market. 5 years ago, post-COVID, you could have picked something potentially blind and you would have done well because of where the market's at. But that margin of opportunity day by day is increasingly narrowing, and you have to make sure you tick all your prerequisites prior to recommending anything.
Absolutely, makes a lot of sense. And where do you see is the smartest money going in the UAE market right now?
So any market, any investment, any commodity, you always want to look at the supply and demand metrics. We don't want to, apartments, for example, account for around 85% of the market share here. Villa and townhouses is a much smaller segment. So that's where I would be parking my capital, is because it's in demand. You've got loads of families moving here. There's a economic agenda, from the Dubai government, because there's such a shortage of schools for the amount of families. So you want to pick an asset that caters for the demographic and the demand that's coming to Dubai. If we're then looking at another potential asset class with apartments, studios and one beds, they dominate the apartment share. You have to be selective. So it's not to say they won't perform well, but 2 and 3 beds. If you look at the inventory of a project, you'll typically have 10 2 beds, 5 3 beds, and hundreds of studios and 1 beds. So there's a lot of supply within that particular segment. So I'd focus on larger unit types as well. And then if we're looking at prime real estate, I think waterfront in any city, any region will always hold its value. Dubai, 8% of waterfront, that includes canals, beachfront, islands, but
Those sites are always popular.
they're always popular, and exclusive beach access, for example, is less than 0.5%. So if you can focus on rare segments that can withstand the test of time, that's where you'll make strategic entry points and preserve long-term value. I think that's really, really important. A lot of people say, yes, Dubai's booming, yes, Dubai's this, but you have to be extremely selective with where you go and where you
Very
enter
careful.
into. Of course.
Absolutely.
Every investment's a risk, but it's how you carry out
Approach it.
of course, and how you mitigate them. So we will reverse engineer any investment and look at the risks prior.
Savannah, that's really interesting. And honestly, I think listeners who are planning to invest will find this advice very valuable. And moving on, are people leaning more toward ready properties or off-plan projects these days?
It depends. There's a very healthy mix at the moment. Off-plan will dominate the market, and ready property will cater for the end users or people looking for instant passive income. They both have their pros and cons. If you're buying a ready property, you're already buying it at its peak because those who invested early have already seen that appreciation. But that's not to say that all off-plan is going to grow just because it's under construction. If you actually look at the data, there's some areas in Dubai where off-plan by the same developer is launching at a higher price than what the ready property is. Now that makes no financial sense, but off-plan dominates because the majority of the market is supported by foreign direct investment. Now, if you understand what the rules are for purchasing overseas, most countries say, like the UK, you can put 5 or 10% down and leverage the rest. You can't do that here because the government don't encourage high leveraging because, one, it's haram, and also they don't want to create market volatility. So foreign direct investors can't just say, I'm going to put 10% down and borrow the rest from the UAE. It doesn't work like that. If you're overseas, if you want to buy a ready property, you have to put 40 to 50% cash down straight away. So off-plan is often favourable for the overseas investors because they can put 10 or 20% down and stagger the rest. It's a lot more cash friendly with their cash flow. So that's why you'll see a lot of people putting or going for the off-plan option as opposed to a ready property, just based on liquidity available.
And is it, a good strategy in today's market?
Yes, off-plan is a good strategy if executed correctly. If you off-plan, I would always recommend in off-plan, you're an opportunity investor. You want to enter into a landscape before the masses when the price is at the lowest price per square foot it will ever be. Now, in order to ascertain if it's the lowest price it will ever be, you need to look at comparable waterfront communities. How much growth have they seen? How does a similar like community compare to what's already a mature community but on the same scale? So we take waterfront, for example. Blue Waters is trading 6,000, 7,000 dirhams upwards PSF. You can have Dubai Islands and Maritime City that are arguably going to be better communities based on what Nakheel are planning on implementing, but they're coming in at around 2,500, 3,500.
And there we see the market evolving.
So you can see where the growth, where that gap in value is, you can position yourself there. And that's where people will start to see the double-digit returns by capitalizing on those low prices. Would you buy an off-plan in a really mature community? No, because developers aggregate their launches and they do forced engineered appreciation. So as the community evolves and develops, you'll see it with Amar, top developer. Amar Beachfront, each launch that they do in their community, they will increase the price per square foot because the developers de-risked, so they can afford to put their prices up. The area is more mature, it's more desirable, there's more eyes on it. So as long as you're positioning yourself...
And there is a lot of hype about their island project, isn't it?
Yes.
Coming up.
Yeah. So there's a lot of hype, and Amar's a fantastic developer. we recommend and we work with them very closely, but doesn't mean we'll recommend every single one of their projects for investment, because there might be something better. You can't just go on the basis, when off plan, just based on the name, a brochure. You have to look at the location, where you're entering into. Obviously, the developer we spoke about. Infrastructure. Off-plan infrastructure is such a key part. What is currently in the area for this community and what's coming. Where that growth comes from the first launch to the last launch in the community, you would have had different non-speculative introductions of infrastructure happening there. Is there a metro station coming in there? How much is the government investing in infrastructure surrounding that area? Is it a focus for the government? If it's a focus, why? Is there any commercial coming that's going to support the demand for rental or resale or jobs? Is there hospitals? Is there schools? Every patch of greenery? All of that will have an influence on the price. And that's where you can really see those sharp, aggressive returns when you do an asymmetric risk of the perceived risk of an investment versus the actual fundamentals that are going into an area. If you don't have all of this outlaid and it's all just speculative and you're riding on the fact that a brochure looks great, it carries
all
way
that
too...
glitters is not gold at the end of the day.
Exactly. It carries far too much risk. And
True.
I think that's what a lot of agents don't highlight in the market.
That is absolutely right. And it makes sense. Now, we have already discussed that the long-term off-plan properties do work for the investors coming from abroad. But I think a lot of UAE buyers as well are also investing into this. So who is this suitable for?
Off-plan suitable for everyone. Now, we do face, one of the downfalls of the market is actually you get compounded pressure from everywhere. You get international investors and you get local investors and you get existing buyers in the market. And you do face a lot of pressure when you have in-demand launches. No one believes it when you try and explain to a new client overseas that in-demand launches literally sell out in seconds. Literally seconds. So I think it's suited for a mix of people, but it entirely depends on their goals. What could suit someone for off-plan might not suit the person standing next to them. It entirely depends on their goals, their timeframes, and their expectations of the market. I always ask people, what are your expectations of the market?
What are the end goals you're looking for?
Yes, because there's a lot of hype, there's a lot of misinformation, and when you have your expectations up here, it creates an unrealistic working relationship with yourself and a potential client. So I always ask, what are your expectations? What are you looking to achieve?
Exactly. And then also moving on to the decisions that are made on emotional basis as well. Property decisions can be emotional. How do you help clients manage fears or unrealistic expectations? I think this is a very important topic to be discussed on the show today with you.
This is super important. So when you've got an emotional buyer, I think to outlay, always base any decision based on data. So I will often always run numbers, cash flow breakdown, projections. Everyone sees everything in a clear snapshot. Because when you actually outlay the numbers, it switches their mindset from being an emotional buyer to the actual logic of this investment. Does it make sense on paper? And a lot of people get wrapped up into the lifestyle or the community. But if it's an investment, then you need to take away the emotion and you need to look at the numbers. So I think using data, being data-driven and being transparent will help you manage your expectations, and always working on a conservative basis. You'd rather your client say, oh, you made me an extra 10% than saying, well, you promised me 15 and now I'm actually down 5%. Always knock 20% off your calculations, even if you think it's a winner.
So practicality is what is required here and helps people make better decisions when it comes to this.
100%. Always be transparent, and I'm a big believer that always treat people how you'd want to be treated if the shoe was on the other foot, and just work with integrity.
Be fair.
Yeah, be fair. Yeah, because it's a lot of money at stake. It's potentially people's life savings that they're coming.
Good afternoon. It's 1 p.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. The top stories here. Dubai has announced 2 innovative projects to reduce traffic and improve connectivity across the city. The Dubai Loop will use tunnels to carry vehicles through high traffic areas, while the Glideways network will feature self-driving pods linking metro stations with nearby neighborhoods. These initiatives continue the Roads and Transport Authority's efforts to ease congestion, having completed 67 rapid traffic improvements across the Emirates last year. Khaleej Times reported today. Moving on, Dubai's air taxi project is also now 80% complete and remains on track for launch by the end of 2026. Roads and Transport Authority Director General Matar Al-Tayer says Joby Aviation will exclusively operate the service for 6 years, with trial flights already underway. He also confirmed that driverless electric vehicles will begin operating soon, starting with about 100 autonomous cars and expanding to 1,000 across several areas by early next year, a report from Gulf News reported. The RTA says these developments are already improving mobility, and taxi waiting times reduced from 25 minutes to just 3 minutes. Moving on, gold and silver prices rebounded strongly on Tuesday after a historic sell-off. Spot gold jumped about 6% to $4,930 an ounce, while gold futures rose around 6.4% near $4,949. Spot silver climbed over 6% to approximately $84 an ounce, with silver futures up nearly 10% at $84. The recovery followed steep losses, including a near 10% drop in gold on Friday and a roughly 30% collapse in silver, its worst one-day fall since 1980. Mining stocks and metals-linked ETFs also moved higher, according to CNBC report on MSN. That's the news for now. Follow more news on X, WhatsApp, Telegram, and at mirabusiness.fm.